Yo, what's up, everybody? Welcome. Welcome to the session today with former hedge fund manager Mark Putrino from the Benzinga Trading School. We're going to be starting in 20 minutes, so just make sure that you have everything set in order so that when we get started, you are paying attention, making sure that you're taking notes. If you do want to take notes, we are going to cover a lot of topics today: market events, market discussion, trade ideas, education, setups. We're going to give you everything today. Now, it's a sneak peek of what we do every single day on the trading school, which is where Mark is right now. A lot of you folks are asking me, where is Mark right now? Well, Mark is actually in the trading school. He's there Monday to Friday, 9 to 5. So classes are, the entire day as well for about 3 to 4 hours. And yeah, you get Benzinga Pro as well. Because you guys are asking me, does the trading school come with Benzinga Pro? Yes, the trading school does come with Benzinga Pro. You get everything. Mark Putrino classes Monday to Friday, office hours, Q&A sessions, live classes, like a whole bunch of different chat rooms for different types of needs that you may have. So a lot of you guys here that are new, make sure that you're paying attention here. Okay, make sure that you're paying attention, and I'll get this out of the way because I always get these questions. The link to join the trading school is a St. Patty's special going on just for today. 70% off with a whole bunch of stuff added on. And we're going to be raffling some things here as well. So if you want to join, the link is in the description of the chat of the YouTube thing. And we're going to post it on the Zoom chat as well. So just make sure that you are here when we start in 20 minutes because you do not want to miss this session, believe me. So with that being said, folks, make sure you have everything ready. 20 minutes. We'll see you in a bit, right? What's up, everybody? Well, okay, 8 minutes, 9 minutes. We're gonna get started here with former hedge fund manager Mark Putrino. A lot of you guys know him from the Benzinga Trading School. That's where he's at now. Monday to Friday, literally 9 to 5 there. With the students, you have classes for about 3 hours, 4 hours a day. So Benzinga Pro is included. Everybody that's here today is getting hooked up with, a laptop. So everybody that joins today, all right, is going to get the St. Patty's special, basically 70% off and a free laptop. We just added that. I just added it right now. So shout out to all you guys. You already got something. We're going to be talking about ideas, educating strategies, over margins, setups that we've made, and that we're going to position yourself in this market. So my promise to you is that by the end of the session, be 1, 2, 3 hours, I don't know. By the end of the session, I promise you that you will have a much better understanding of this putting in the market. Position yourself. You want to help, right? If you think better at trading, we're here to help. I don't know what's it's like it. I don't think it's like it. But folks, we got 7 minutes left. 7 minutes. All right, 7 minutes. We're going to start it with Mark Putrino, Chief Educator at the Benzinga Trading School, former hedge fund manager under Steve Cohen and Mario Gabelli, two of the biggest giants out there ever to walk on this earth, traders worldwide. So Petrino traded with them. You guys, you don't want to miss the session. Trust me on this. So I gave you guys text and everything. Look at MULN. It was 99 cents before. I gave that to you. So guys, here it is, okay? You do not want to miss the session today with Mark. It's gonna be insane. Right? So we're gonna get started. Remember, so that are chatting here, folks. We're gonna get this thing started. Check out everything. Fight everything, go, guys. We'll see you in a little bit. Ladies and gentlemen, the time has come to get the show started. All right. We have Mark Putrino, former hedge fund manager and also chief educator at the Benzinga Trading School with us. Before we get started, introduce myself. We're going to be, let me just start the way. We're going to be talking trade ideas, education, feedback on strategy, how to implement current market. We're going to be talking overall market events, right? An overall market discussion. We're going to be talking about trade ideas. At the end, if we have time, we'll go over trade ideas from the chat room. But we have something already set in stone for you guys today. It's like I said, you don't want to miss this session. And in the chat, go ahead and let me know when you guys are ready to start. So that goes for the people on the Zoom chat and also the people that are on the YouTube chat. Let me know when you guys are starting. So we can start moving here with this thing. And yeah, so those are going to be the topics we're going to be covering today. I know people are asking me about the trading school, so I just want to, before we do get into the whole thing here with Mark, yes, you can join if you want the trading school. I highly recommend it. We do have a 7-day money back there, so I'll get a free laptop. So that's all available for you guys if you do want to join the community, right? And without further ado, ladies and gents, let's go ahead and bring out the man of the hour, Mark Putrino. Let's go ahead and bring the man here. How are we doing, Mark?
Hey, good, Rodrigo. How are you?
I'm doing great, man. I'm doing great. Great lesson today at the school, man. I know that they were covering the chapter 2, right? Is it levels chapter 2?
No, today was chapter 6.
Chapter 6. Okay, yeah,
Psychology.
I had it confused with the one from last week. Okay, investment psychology. That's one of my favorite ones. Before we do get, we dig deeper here, Mark. I just want to give you guys a brief introduction here. Mark Putrino traded right there with Steve Cohen, and eventually assets under management, and also traded very on Squawk has about maybe $34-35 billion in assets under management. So Mark Putrino is the instructor of the Benzinga Trading School, former hedge fund manager. So I have the honor and the privilege to be here with Mark and with you guys to go over all this stuff out. So how was the day in the class, Mark? And also, can you please share your screen?
Yeah, first, Rodrigo, can you hear me okay? Because I think we're having some audio problems. A couple of the people are saying they're having, I see in the chat some people are having.
Yes. Share the screen and that might fix it.
Okay.
Share your screen, that might fix it. But yeah, I mean, the audio is pretty fine. I can hear you well.
Okay.
Yo, Manta, love from India. What's up? We got people from India. Let us know where you're tuning in from. Let us know, folks.
Okay, so do I look good over here?
Yeah, that looks fine.
Okay. Yeah, so today's lesson was our lesson number 6. We talk about investment psychology, and it's one of the things that people really don't talk too much about, but it's really one of the most important things that there is, and people should talk about it because a lot of people spend a lot of time trying to come up with these fancy trading models that work, at least on paper, but then when they go to actually use them in the real world, then they don't work. Trading models are like having a gym at your house. It's great to look at, but if you don't use it, if you don't have the self-discipline to stick to it, then it's not going to do you any good. So we find a lot of the people that make mistakes are making mistakes because they make these emotional decisions. So one of the things that we focus on is how to have people, help cope with panicking or taking a profit too soon or holding on to a loser for too long. So basically, I'll just give you my little bit of my background. I'll talk to you about a few things that we've been doing in the class this week, or going back a few weeks. So now I'm the head of the Benzinga Trading School. My name is Mark, and as Rodrigo mentioned, I was fortunate enough that years ago when I first came into the business, I was hired by Mario Gabelli, who's one of the greatest money managers, not of only of our day, but pretty much in history. And then from there, I went over and I traded for Stevie Cohen, who allegedly the show Billions is based on, but now he owns the New York Mets, the baseball team. But back then, he was just a phenomenal hedge fund manager. So I worked directly with these guys, right on the same trading desks. After I left Stevie's shop, I was a head trader at 3 different money managers, which I oversaw all kinds of strategies: hedge fund, value, fast money, slow money. I spent some time as a market maker. I've been a member of the Chartered Market Technicians Association for 20 years. So let me, enough about me here. Amy, let's talk about the market. And I think that this is an important time, and I think it would be a really good time for you to join. Now, of course, I'm going to say that I want everyone to join the trading school, but I think this, I guess any time would be a good time, but I think this time is more of a good time than other times. And that's why, well, I mean, you name it, inflation, volatility, how do we protect ourselves from rising interest rates? These are all things that we look at. And one of the things that drives markets well, first of all, let me put it this way. Forget what the media is saying. Just shut off CNBC, shut off a lot of your social media analysts or whatever, and stop listening to these so-called gurus, because on Wall Street, gurus are a dime a dozen. And if you join the class, the idea is that I'm going to help you learn, and the other students are going to help you learn how to make decisions for yourself. Now, I just want to show you a brief example here. I mean, I could talk for an hour about just this chart here.
This is an example, just to make sure that everybody's on the same page here, Mark. This is an example from the trading school, something you guys did or you guys are doing, or?
Well, we follow this. We look at these different levels every day. So one of our classes is levels, and in the stock market, or really in any financial market, there's certain price levels that are more important than others. So I want to just go back to why we found this bottom and why we've been rallying. And there's a couple things here. First, I want to say that while the market was selling off, and this is just the technology sector here, technology was driving the market at the beginning of the March and at the beginning of the month. And if you listen to the media, all you would have heard about is how Ukraine is forcing this action lower, right? But now the market's been going up and things are still really bad in Ukraine, if not getting worse. Doesn't it sound like a contradiction? And how could bad things in Ukraine push the market down, but then the market go back up if things are just getting worse? So the media was wrong. This was not what was driving the market. What generally drives the market is the technicals, the trends, the levels, and the momentum. And these are the things that we talk about in the class. We were not surprised to see this technology sector find support right down around here. And the reason why is because it was this resistance level back here. For some reason, this level is important. And when tech got here, it was a good sign that, hey, maybe the sell-off is over for the time being. Now, Rodrigo, look where we are after this big move, which is, a 10% move in, what is this, 6 trading days? That's pretty extraordinary. Now, I think there's a good chance that this move is over, at least for the time being. And why is that? Well, we got to another important price level. Just like this price level is important, this one is. Why didn't it stop at anywhere in here? I mean, I don't know, but we don't need to know. But when something forms a peak or a valley, that top of that peak and the bottom of that valley become important. So here, this level was support, and it's become resistance. And this could put a top on this rally, right? So I think this is a really good reason why it's time to get in
right
now to the class, because we're going to know probably over the next week or two whether this is just a bear market correction or are we going to power through to new highs. So it remains to be seen, but what's going to tell us is whether or not this resistance level here breaks. So this is one of the things that we focus on in every day is the various sectors and what important price levels the market is at and so forth. And it's don't let the seeming simplicity turn you off, right? It doesn't need to be overly sophisticated. It's just basic common sense and understanding supply and demand dynamics.
Okay, and so basically, just to sum this up for the folks here, you are providing the education, right? There's 8 chapters total. Okay, let's just make sure we're clear on this, guys. There's 8 chapters total. In the chapters, I don't know if Mark can pull up the syllabus, but in the chapters, you'll have everything from, let me get the first one here. But if Mark can pull up the syllabus, that'd be awesome. So these are the chapters that we have. We have an introduction and philosophy as chapter 1. Chapter 2, you're going to have levels. Chapter 3, you're going to have trends. Chapter 4, you have momentum. Chapter 5, investment psychology. Chapter 6, market principles, analysis, and sentiment. 7, investment strategies. And 8, trading systems. And so, yeah, I mean, maybe you could touch a little bit, just a little bit on each of those chapters, just to give them a general sense, right, of what we're going over there in the school.
Well, today, or what I just showed you guys, is how certain price levels are more important than others. So I think that's probably one of the most fundamentally important rules in understanding how trading works. And it really astonishes me that so few people pay attention to it. But I think it's so important that we have a whole class dedicated to it. So the way this works for you guys is that these classes go on and on and on for a year. We start at 1 and then we go through, and when we get it to 8, we start again. So it's not just 8 classes and then we, kiss you goodbye and say, see you later, good luck. I wanted to do this class so we in the morning, the first thing is we review these fundamentals. What's a support level? What's a resistance level? How do you know if something's in a trend? What's momentum? And then what we do is we look into the actual market and see how it is applicable. And I think this is better, makes us better than any other school that I've seen, because we're dealing with the market in real time. Everyone's a genius. Everyone can show you, oh, last year I said this was going to happen, and sure enough, it did. But by being cognizant of these things, and just by being cognizant of these levels, we were able to understand that the market was just putting in a bottom a week or 2 ago, or whenever it was. So we're not dealing with crazy esoteric things like, Elliott waves, Fibonacci stuff. I mean, in my opinion, I don't teach that stuff because I don't know. I've never used it. I think you can focus on
just
these
distractions.
Yeah, it doesn't have to be that hard. Wall Street wants things to seem really hard so they can charge fees, big fees. And there's that. And there's also the fact that the media gives a lot of misinformation. There's a lot of people that might be trying, but they just don't have the experience. There's other people that know they're wrong, but they're just trying to sell you something anyway. So it's a really difficult environment out there for people that are new to the game. And there's a lot of things that can really be confusing. So what we try to do in the class here is, cut all of that junk out of the way, just focus on the stuff that's important. And so far, I think in the 6 months that we've been up and running, we've had a lot of people that have done really well and made a lot of money and figured out what they were doing.
It's been amazing. I want to give a quick shout out here. Sorry, Mark, need to give a quick shout out here to Mary for joining. Welcome to the family. Mary, you're going to have a lot of fun. Just make sure, Mary, that when you get the email, when you sign up, you're going to get an email that says laptop delivery. Basically, just fill it out and put the address that you want us to send the laptop to. Everybody is getting it. Everybody that joins today, the school, we have a St. Patty's deal today. So, Mary, you're going to get hooked up, and everybody else that joins. And you get access to Benzinga Pro. All right. Same logging, nothing changes. But all right, Mark. So, yeah, I mean, all these. So, this is the way that I look at it, right? Every single chapter has a unique advantage, right? But ultimately, you can know all these things, and your psychology or risk management strategy, or lack of strategy, I might say, can make it not matter at all, right? So like I could know trends and levels after, let's say you take the school for a year, and you're polished up on levels, trends, momentum, patterns, all that stuff, you really can read the charts and talk that language with the market. But then if you have a very, very risky, no risk management skills whatsoever, and the psychology of trades, the emotions of trades eats you up, it doesn't matter, right? So that's why I think that investment psychology class you have is probably the most valuable, because without the psychological part of it, you're just not going to last long enough, even if you know these things, right?
Yeah. One of the things I talk about in psychology, and this is probably different than what a lot of the people that are listening now have heard. You've probably heard about paper trading. Paper trading just means you come up with a system and it looks like it's going to work, and you paper trade. You say, I would have bought here, I would have sold here, but you don't put real money into it, right? Paper trading is easy. It's overrated. I'm all for using paper trading to get your system up and running. But if you don't have real money on the line, you're never going to know what it's like to what it's like to really have the skills to be successful. So think about this, right? Say you have on paper, you have this system that tells you buy 1,000 shares of this $10 stock. And if it gets to 15, sell it. That's a 50% loss. Now, say you're just paper trading and it goes to 10 and then 11 and then 12. You're like, oh, hey, I'm the king here. I'm great. I'm going to be the next, the next Wall Street guru here. Trading is easy, blah, 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 blah. Goes to 13, 14, 15. Hey, I made a 50% profit. My system works. I know what I'm doing. I'm a genius. Well, guess what? Say you have real money on the line. Say you put $10,000 into this of real money and it goes to 11. Now, all of a sudden, it's like, wait a second, this isn't just a profit on paper here. I could withdraw this $1,000 and pay off some bills. I could maybe take my partner or my wife or whatever out to dinner or go away for a weekend. Or, well, all right, well, I'm not going to sell it. Now it goes to 12. And now it's like, wait a second, if I cash out on this, I can have $2,000 or $3,000. So on paper, it's easy to sit there because it's not real. But when you have real money on the line, it makes it a big difference. And everyone in the history of trading that's a human being is susceptible to these emotions in some way or another. The first step to, the first step to conquering it, or I guess dealing with it, is understanding that it's going on. Understanding like, hey, I'm making a trade here. Why am I making this trade? Am I guessing, or is it that my model says so? So the difference between the great traders and the not so great traders and the traders that really fail, a lot of it has to do with the psychology. It's the guessing, it's the thinking that there's a secret system that's going to work. But like I said, having a trading system is like a home gym. It's great to look at, but if you don't use it, it's not going to work. And it's the same thing with coming up with a paper trading system. It's easy on paper to make these trading systems that work, but when real money is on the line, it's a whole different ballgame. So just let me show you a couple other things that we do here in the class.
Yeah, and I do want to mention really quick that, well, I mean, and maybe you can give them a little bit of your experience as well. Like, I mean, what was it to trade for some of these giants like Steve Cohen?
Well, if you want to go to that, like, what, if you want to talk about psychology, when I was at SAC, they literally had a full-time psychologist on staff. And if your trading was messed up or your head wasn't in the game, you would go in and talk to this psychologist. So that's how important they thought it was. And when I was there, Steve did what I believe was his second basically public interview ever with the Wall Street Journal. And the person who was interviewing him kept asking him, what do you use? Do you use this? Do you use that? Do you use DeMark? Do you use moving averages? And Steve was like, that I keep telling you, that's not the secret. The secret is the risk management and the investment psychology. So my attitude is, if it's good enough for him, could be the greatest ever, arguably, when it comes to trading, I think he's someone you want to listen to when he gives you that advice. He doesn't have a secret formula. He loses money on trades and investments. Same thing with Mario, same thing with Warren Buffett. The greatest traders that there are, or the greatest investors that they are, have losing positions, have losing trades. It's just part of the game. The difference is, what do they do with them? Do they get out of it while it's a small loss, or do they hold it and ride it all the way down until it becomes a big loss? So that's a big part of it. It's understanding how to trade successfully is understanding the markets, but a lot of it is also understanding yourself. If you try to push yourself into a strategy that doesn't fit your personality, you're just setting yourself up for failure. If you're someone who's like kind of high energy and really likes looking at the markets and reading the news and this, that, and the other thing, well, then you might be a good day trader. But if you're someone who doesn't want the screen every day.
Since you're on that note, Mark, that every trader is different, which that absolutely makes sense. And a lot of traders, many times, they'll end up trading things that they would have not traded because they're trying to find themselves. And, am I a penny stock trader? Am I an OTC trader? Am I an options trader? Am I a dividend? That they start doing all these things and eventually just come back to the same place. But basically, in the trading school, right, all these things that you're teaching them, the whole point is that once you know all these 8 chapters in a whole sense, right, in a holistic sense, you will be a much better trader overall. Now, does this apply to crypto traders, option traders? Does this apply to any sort of trader out there, or is it just for stocks?
Any financial market this can apply to. It can even apply to things like real estate. Any market where there's supply and demand and it's liquid enough. I would be willing to bet if you put the price of houses on a chart, some in a town somewhere, you could see some of the similar things that we see. But any market, whether you're a crypto trader, we have crypto traders, we have options traders, we have swing traders, we have day traders, we have buy and hold. It's not the how does Mark Putrino trading school. It's the Benzinga trading school, which teaches various trading styles. I don't know what's right for you. And when I mean you, I don't mean Rodrigo, I mean who's ever out there listening. Like if you were to take Tom Brady, right, arguably the greatest quarterback of all time, and you made him a linebacker, he probably wouldn't last too long. And it's the same thing. If you try to work a trading style that's not your personality, it's like slamming a round peg into a square hole. I mean, you might be able to get it in there, but eventually you're going to have a problem. So that's another reason why people fail. They don't do something that is conducive to their personality. Like I said, a big part of being successful is understanding yourself. It's understanding the markets, but it's understanding yourself. What is the big problem that you have? Now, me personally, back when I was trading, my biggest problem was taking my profits too soon. Okay. I never had a problem with getting out, for a loss. I had no problem taking small losses whatsoever, because I guess I was around the block enough times to know that, there's always going to be another opportunity. But my problem was selling this stuff too soon, leaving money on the table. Like the example I just gave, buying something at 10 and then it gets to 12, selling it, and then watching it go to 15 and leaving money on the table. I can't tell you that I've ever perfectly overcome that, because I'm a human being. But now that I have an awareness of that, now that I'm aware that that's my biggest problem, if I have a position and I'm going to start thinking, I should sell it, that's when I take a break, take a step back, maybe take my dog for a walk and just think, wait a second, Mark, hold on here. Okay, hold on here. You've gotten into problems before because you sell too soon. You got to have discipline. You got to let it ride, whatever. I'm not saying I'm perfect, but the awareness of it is enough to really give you an edge amongst all the other people that you're going to be trading against. And ultimately, when you trade, there's always someone on the other side. You're not trading against the market. There's another human being on the other side of the trade. So if you have an awareness of these things, I think it really goes a long way, Rodrigo.
Yeah, and the thing is also, just like you touched on that, Mark, there's always somebody else on the other side of the trade. And who do you think, right? Let's just, try to use a little common sense here. Who do you think is going to do better? The trader that's winging it, or the person that has real experience, trading with a full community, hundreds of eyeballs there, making sure everything's covered with it. Like, I mean, it's just pretty obvious, right? Let's say if you grab somebody that's never been in a boxing or trained for boxing and you put him against Mike Tyson or some really, heavy hitter, Tyson Fury, who do you think is going to win? That person that trains every day, that goes to the gym every day, that eats right, or the person just that, is just there winging it, right? So the same concept applies to this, Mark. You have to find the right community. If you're in the wrong community, it doesn't matter what you're learning. It's not going to be beneficial long term. And here we're trying to help traders long term, retail traders specifically.
Yeah, it goes back to this thing where money makes people think irrationally. All right. It just makes people do things stupid. Like, what I do that's irrational. Like if I think my bank account is lower than I think it should be, like I just don't even check it. And then I go to the store and it's like I give them my debit card. I'm like, oh gee, I hope it clears. And then I go and then it clears and I go home and I look at my account. It's like, oh, there's $1,000 there or whatever. But that's a psychological hangup that a lot of people have. What amazes me is how many people, Rodrigo, will, make a big investment, whether it depends on the person, but, whether it's $1,000 or $10,000, or if someone's well off $100,000, they might see an ad or not an ad, I'm sorry. They might see something in a chat room. Oh, you should buy, this new meme stock, and they'll throw a big amount of money at it without even thinking. That same person, if they're going to buy themselves a new dishwasher, they might spend a week looking for a way to save $50, or they might put off buying it until it's the next sale so they can save $100. I think when it comes to money, people just get irrational.
And here's why, right? So like, I think it was last year when I was trying to make sense out of all this stuff because the market was just insanely ripping higher, right? So regardless, right? It was a point where we got bad news after bad news after bad news, and we were new all-time high, new all-time. So it just not some things weren't making sense at one point. But to what you're saying, Mark, that's really one of the perks, right? Where you're trading with a community, right? Where it's just you're not doing this by yourself. You're not trading in a vacuum. And on top of that, you're doing it with a community of people that are all there to learn, are all there to become better traders. It just gives that special feeling, like when you were in class, when you're like seventh grade and you were like pumped about class and everybody was there early in the morning. It's like the same feeling. You're there at 7 a.m. talking about trades. And you used to have these when you were a hedge fund manager. I remember you guys used to have meetings in the morning, right? Before you all went out and did y'all's thing, right?
Yeah, similar pretty much. That's kind of the thing is that, it's in the institutional trading world, the traders, there are different roles, right? And I mean, we could talk more about that at length. But there are different roles. There are traders, there are portfolio managers, there are analysts, and the traders are generally the people that are watching what are going on in the market. They know there's a buyer of this stock around, there's a seller of that stock, this important level we've gotten to, interest rates are doing this. And it's the trader's job to tell the rest of the investment team what's going on in the market. And that usually happens early, before the market opens. Well, people on Wall Street get to work early. I mean, you go to the Goldman Sachs trading desk at 6:30 in the morning. I mean, it's packed, right? People are there early. So I kind of just wanted to base it, I don't know, maybe because I'm so used to getting to work at 7 a.m. But no, not all kidding aside, it just gives us a lot of time to go through the market, to get a feel for the day. And what I'm happy about is I see some of the same people there every day. So that tells me that I'm getting through to people, which tells me I'm doing my job, because if they didn't think it was worth it, I don't think they'd be getting up at 7 a.m. And we have people in Germany, California, just like literally all over the world, Hawaii. But yeah, the school is based on New York Stock Exchange hours, and then that's 9:30 Eastern time. But yeah, man, that's a good time to start, I think.
It's important to note that well, the majority of people, of course, why they stay, because yes, you're going to get education and everything, right? because it is for the full year, just so everybody knows, right? The 1297 is for the full year, free laptop. You get Benzinga Pro, you get Mark's trading chat room, a whole bunch of other stuff, right? But what I'm trying to say, Mark, is that the market itself is always changing, right? So like my mom's a doctor and she has to go take recertifications of certain medications, things that come out, maybe some drugs are pulled out of the market, whatnot, that sort of stuff, right? When you're dealing with pregnant women, you got to give them like the right medication, right? And my dad's a lawyer, so he also has to recertify with the new laws. So traders, they have to take this, I guess, recertification, if you want to call it, every year or so. Why? Because the market changes, not just every year, it changes every day to day, week to week, quarter to quarter, Fed meeting to Fed meeting, CPI print to CPI print, and everything else that's happening in the market, right? We can't predict the future. And we have to trade around the volatility, which is why you need to have these things down, the levels, the trends, momentum, and apply it to different situations because it's easy, like Mark says, to put a stock, show you lines 2 years ago and say, you could have done this, you could have done that. That's super easy, right? But when you're doing this live in the moment, as you're actually making trades, it's a totally different feeling, and that's really the goal, right? We want you guys to become better traders, to start doing these things by yourself, and as the market changes, you stay with Mark for the ongoing mentorship because you can look at the same concept 1,000 different times in 1,000 different charts, and they're all going to be in a different way, they're all going to look different, and it's going to be a different market. So the concept is the key thing here.
Yeah, look at I just wanted to bring up the S&P 500 here and just show you like this here is where the class started, right? Like right back here around sorry about that. I'm sorry. Right back here around I forget the exact date, but it was right back here. So at the time, what was going on? Well, the market was making a low. Then we went into this rally and we had a sell-off. Then we made a top. We've had this big move lower. We've had the meme stocks have a lot of the meme stocks have blown up. A lot of the SPACs have blown up. So, I mean, in 6 months, the market changes. And this is a reason why I think you need a class where if you really want to be effective, where you're studying the market as it goes on. A lot of people have a tendency to think that the market is like this mathematical thing, like a chess game. And they could figure it out if they're a super genius. And that's like if they're like a Bobby Fischer or Gary Kasparov, they can figure out the best chess moves and all this stuff. You got to throw that out the window. That's not how the real world market works. The market is not chess. The market is more like poker in this sense that it's a skill, but the rules change because people change. If you're a poker player and you play one person today and then you play another person tomorrow, well, it's a different game. The rules are the same, right? The cards still count for the same amount, but a successful poker player knows how to read the emotions of the other person or knows when to bluff, when to not to bluff. The rules are always changing. In chess, the rules are always the same. And I think that's another reason why a lot of beginners have a problem is because they basically spend their time looking for the proverbial fountain of youth, so to speak. Like if they look hard enough or they get into the right chat room or if they subscribe to the right system, they're going to find this, they're going to figure out the system that always works. And it just doesn't work like that in the real world, man. It's like they say, if it sounds too good to be true, it probably is. And if you think you're going to find a system that's always right and you're never going to have losses, then you might as well read a Ray Bradbury book or some kind of good science fiction because it's just not going to happen. At least in my experience, it's just not going to happen. So the market changes. So that's what I mean about the poker game, right? The way people act up here when we're at a top is very different than the way people act down here when we're at a bottom. The tone changes, the vibe changes, the media changes, the moves change. Like, for example, if you're coming off a really big bottom, you could have a really big move higher, right? That's a different dynamic than if you're at a top. When you're at a top, things are euphoric. Look at the S&P. Also, when you're at tops, things are much more chill than when they're at bottoms. So look at the most recent top here of the S&P 500. Basically from December 28th to January 4th. Look how quiet the market was. It's these days up here, right? It's almost so narrow I can barely even put the rectangle around them. Like, this is a top. People are chill, people are hopeful. No, no one's really worrying. Now here we are a month later, and we're at a bottom. Now all of a sudden people are panicking, people are selling aggressively. Market tops are chill because tops happen after buying. People are, they're chill. You buy on hope. Oh, making money, da da da. Market bottoms come after selling. Selling is caused by fear. Fear is a powerful emotion. Look at the volatility between a bottom and a top. Here's your top. Look at how look how little volatility there is, Rodrigo, right? Then you go to the bottom and look at this. It's the same instrument here. It's the same market, but look at how more volatile a bottom is than a top is. So this is a reason why I think you need to get into the class, or at least give us a try, at least give it a try. I'd like to ask you that. I think that you will be happy, because to really learn trading and to really learn the way this stuff works, you have to go through different market cycles. You have to see things act different at different times. Different things drive the market at different times. And these are the things that we talk about in the class every day. So I want to just come over here and show you guys oil, because this is another thing we've been talking about a lot. Obviously, there's been inflation. And here's oil, right? Now, it's interesting if we talk about these, how certain price levels are more important than others. And you might have heard the statement that markets have a memory. And what that means is that a certain price level, we already talked about how some price levels are more important than others, but certain price levels can stay important for long times. People say, well, how long? And my answer is, well, longer than you think. So look at this chart, this long-term chart on oil here. I just want to point out, I personally think oil is going to go higher, but it's not surprising to me that we kind of are taking a pause around current levels of, say, 110. Because look what happens. Well, actually, let's say, 108. Look, I even have it on there, 108. 108.75. This black line here is 108. Look how we go back here all the way back to April of 11 through June of 14. So this is, 7 years ago. And now this level has become important again. And this is kind of an interesting to talk about here, because there's a lot of talk going on, obviously, about energy, because we're in this oil, crisis, and things are skyrocketing, and gas is getting high. And there's this talk about, well, why aren't the oil companies, making more, drilling more? Well, there's a couple things, right? One is they're afraid of the regulatory environment. And two is, if you were in the oil industry back here, this was a really good time to be in the oil industry. Prices were high. And what they did was they overdid a good thing, and they glutted the market. They call this the shale crash. This is a long-term chart we're looking at here. Oh, I'm sorry. It says year to date. This should really be 10 years. Let me fix that so I'm not confused. So this was what they call the shale crash. This was not a good time to be in the oil industry. And this move here looks like it was quick, but this is a year. Each one of these little rectangles is a month. So now here we are 10 years later, and oil companies are kind of reluctant to drill again, because they don't want to overglut the market and have something like this happen. So I think there's that. And there's also the fact that, they're afraid of regulation. And why would an oil company take a risk, drilling a new well, if they think, oh, gee, well, in another year, they might increase the taxes or change the regulations, and I might have to cancel it. But I just think it's a good example of how we can see that certain price levels are important for a long time. And one of the things that a lot of the students have been doing as a hedge against inflation is there are certain ETFs that are designed to track commodity indices. And if inflation goes up, they go up. So a lot of the students have gotten into this here. This particular ETF, DBC is the symbol. And look at this, right? While the stock market has been going down since December or since the beginning of the year, this thing has gone from, I don't know, let's call it 2080 up to 2650. So this is a big move. Obviously, it's up more than the stock market. And this is just a regular, simple ETF that anyone can buy. It just trades just like a stock. You don't have to worry about negative tax implications or anything like that. It's just like a regular stock, but it's a way to hedge yourself from inflation or potentially even profit. So we don't want inflation and we don't want bear markets, but as traders, we know that, we can make money on them now. All these ETFs didn't even exist years and years ago, but now anyone can, any retail investor can take a position in commodities. We talk about natural gas going higher. There's a natural gas ETF, UNG, that trades just like a stock. So anyone who thinks natural gas is going to go higher can buy this. And I know some of the students actually have, because we've been talking about how natural gas is looking like it's going to break out above 5. And sure enough, look at this move here today. It was up 5%. And I just noticed that now, Rodrigo. I didn't even see that. So I'm sure we have some happy students there.
Yeah, I know that you were talking about natural gas for a while, and I mean not just that. I remember in August when you called the bottom on oil. We hadn't even started the school yet. We were just, if you are a real OG and you were here and you signed up like before even the school started, because we had like a pre-enrollment period, you made a lot of money with us that time. I think oil hit 60, and then we were looking at a whole bunch of different oil stocks, which rallied big time from that August, and it looks like it repeated itself again. So
yeah, it was
proved yourself right twice.
Well, it just goes to show you how this doesn't have to be that hard, right? And why did I say I think oil is going to go higher? Am I some super genius guru who's got some secret system I discovered on a vision quest? Maybe. Maybe that's the case, but maybe it's not. But I want to just point out something here. And this is what Rodrigo was talking about when we go back to August. This was I don't know if it was a boot camp or whatever it was. All right, I'm going to put this black line right at 62.50. This is oil. All right, oil futures. So this here is where we had that meeting, or the thing Rodrigo is referring to, the webinar here. So it was right here. And I said, there's a good chance oil is at a bottom here. And it turns out, sure enough, I was right. Now, I didn't do anything secret or special. I just noticed that after this sell-off here, we got what is called oversold. Every stock or every market, in this case, oil, commodities, have what we would call like their typical or their historical trading range, their personality kind of, every stock has a different personality, trades differently, or commodity. When something gets really beaten up and it gets below that range, we call that oversold. Why do we care about that? Oversold means something has excessive momentum going down. Why do we care about that? Well, it's like a rubber band. Things that get overstretched tend to reverse. A great majority of trading systems and trading models are based on the concept of reversion to the mean. So when things get oversold, sometimes we can expect a bounce. Now here we had a double whammy. Not only was oil oversold, and this indicator down here at the bottom is a simple indicator where if this blue line gets low here on the chart, it tells us it's oversold. So at the same time that we were oversold. With the same time the momentum got to an extreme, we reached a level that had been support before in May of 21, or in May, right? A few months before that. So I don't have any secret system or anything like that that told me now is the time to buy. I very simply realized, hey, this is oversold. And it's also at a level that had been support. For some reason, when oil gets to 62.50, the buyers would come out of the woodwork and put a floor under it, right? I don't know why 62.50 is the level. It probably has to do with the fact that there's some country somewhere where the oil needs to be higher than that for them to make a profit. So maybe they're buying it to put a floor under it. But regardless, we don't need to know why a level is important. We just need to know that it is. So oversold markets that get to support tend to bounce. And that's what happened here. Now, let's fast forward again, because we had another, I guess, accurate call on this, if you want to put it that way, here in December. This was the Omicron thing right here, the day after Thanksgiving, this big move lower. Anyway, we get down here. This is December 2nd. Where do we find a low? Where did oil find a bottom? Drum roll. Low trade on this day. And before I tell you what the low trade was, I'm sure you could guess what it is, or close to. We're talking about a market that has trillions and trillions of dollars, hundreds of thousands of investors, traders all over the world. But yet somehow on this day here, after this massive sell-off, the low trade of the day was 62.43. All right. We got within pennies of where the bottom was in August and where the bottom was in May. Now, according to academics that believe in random walk and efficient market theory and things like you can't outtime the market, they're completely wrong. If that was true, if efficient market theory was true, there would be no such thing as a well-defined support level. But yet here we can see one right here. So what did we see here? Oversold reached support. Oversold markets that reach support tend to bounce. What did we see here in early December? Oversold got to support. Oversold markets that get to support bounce. And that's why we were able to make these really accurate calls in oil. It's not anything secret. It's just the fundamentals we're talking about. Levels, trends, momentum. We had a downtrend. That's the trend part. We got to an important level. That's the level part. We got really oversold. That's the momentum part. Levels, trends, momentum. If you could really understand those fundamentals, you can be successful. It's not as hard as people make it out to think. So if you understand those fundamentals and you understand the importance of investment psychology and the risk management we talked about before, those are the keys to being successful. It's not finding some secret method that always works or something like that. So I don't know, Rodrigo. I think some of the people are still a little, I don't know what the right word is, but I think some people are pretty happy with finding out that it's really not as hard as they had thought it was when they joined the class.
And the reason is, Mark, that there's a lot of these guru kids on TikTok and social media, and it's very easy for new traders to fall for that, right? Because it's the cool thing, right? It's the cool thing to get your trades from Wall Street Bets. It's the cool thing to get your trades from Twitter, from strangers, right? So we're definitely, look, you don't know what you don't know. I made a lot of mistakes when I started trading, and I wish I didn't do them, but now I know not to do them. And really all it would sum to is to finding the right community, finding the right mentor, the right tools, and you're getting everything here, right? You get the Benzinga Pro, you get the live classes, the Q&A sessions, office hours, the community, everybody's there all day. So this is what I wish I had when I started, 100%.
Yeah, so it's a good community that's been building up, and we got more people coming in, and I like the whole concept of the exchange of ideas. And a lot of the best ideas, frankly, weren't even, they're not like my ideas or things the students pointed out. One of the things that we are, what's actually a valid trade idea or a live trade idea, and it wasn't mine, someone pointed this out, is this Kodak here. So let me just kind of walk you guys through this for a second and just kind of show you our thought process here on this trade. It hasn't worked out yet. It's just, we're just getting going on it here. The idea was to enter the trade if it got below $6 on the short side, thinking it's going to go down, but I'll explain why. So we had this big move higher on, what is today? Tuesday, on Friday. And it was driven by a news story. Okay, fine. Where did Kodak find resistance? Where did it run into a wall of sellers? At an important level, the $6.45 price level, for some reason, has been important with this stock. And back here it was support, and it became resistance. Now, why did this happen? Why would a price level seemingly have this magical thing of power to be able to go back and forth between support and resistance? Why did it stop at 645 and not 650 or not 660 or 629? Well, we don't know, but we don't need to know. Back here, a lot of people bought at the support level. A support level is a lot of buyers. There's enough buyers to absorb all of the supply. The sellers don't need to push the stock down anymore. There's enough buyers to put a floor under. That's what happened here. Sellers were pushing it down. It got to here, it rallied. Sellers pushing it down, it got to here, it rallied. Sellers pushing it down, it got to here, it rallied. So that's great. Now, a lot of these people that bought didn't sell it. If they sold it, great. They're up, they made money, but a lot of them held on to it probably. And once it fell and went lower, all of a sudden these buyers experience buyer's remorse. They bought a stock and then the stock went lower. Now they're losing money on paper, right? I'm sure it's happened to everyone who's ever traded, or everyone who's listened to me. They've bought a stock and it's gone lower. Now they have this loss on paper. So let's go back to our psychological thing. A lot of these people say to themselves, hey, I want to get out of this thing. I made a mistake, but I don't want to lose any money on it. So here's what I'm going to do. I'm going to try to sell it at the same price that I bought it at. That way I can get out of it for break even. So if you have enough of these remorseful buyers placing their sell orders at the same level they bought at, what happens? It forms a resistance level, right? Like we see here. So we're not surprised that we got to here where there was a resistance level. So next step, let's look into this news a little bit more here. This thing drove the stock up. So we go over to Benzinga Pro here, right? We look at the Kodak news, and we could see there was some news today about a patent there, but the news that drove the stock higher on Friday was this thing here. Kodak shares spiked to session high on volume as traders circulate deadline article, blah, 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 blah. So the thing moved up on this news. Now, one of the things that we can do is, well, the thought is this, right? If this news is really that good, if it's really a game changer, if it's really going to change the dial or, move the dial, Kodak would be out there, waving the flag. Hey, great news, blah, blah, blah. We got this game changer, blah, 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 blah. This stock was up 33%. The company gained a third of its value in one day. So if this news was really a big deal, my experience has been that the company would be talking about it or bragging about it. So we decided to let's go to the Kodak website, see if we could find some news. Most companies have, or publicly traded companies have on their websites what we call the investor relations department. It's stuff for people that are investors. It's very simple to get to it. You just do a search for, you type in the symbol, right? So Kodak, Kodk, and then IR for investor relations. And this is a really easy thing to do. And it brings you right to the Eastman Kodak Investor Relations Center. So let's think about this, right? If the news was so good, we would think the company would be saying something about it. But we go to our press releases and, there's nothing here. This was their earnings back on the 15th, right? That didn't drive the news. So press releases. So the company's not really highlighting it. The company's not commenting on the news. Now you can bet that if you have a stock that has gone like Kodak has since the beginning of last year, let's just say, we'll be conservative here. Let's just say 13. If you've had a stock that's gone from 13 to 6, and your company had really good news, I think it's fair to say you can bet your sweet that the company would be out there telling everyone, oh, we got this great new product. So by looking at the website and not seeing an announcement there, that kind of makes me think that, well, gee, maybe this news really isn't as good as it seemed after all. So this sets us up for a potential reversal here. And that's what we're looking at. And this is one of the things we're going to be following in the next few days. And the key is not to just jump right in. The key is to wait for the actual reversal to start, because maybe it keeps going higher. Maybe the news really is a game changer. The company just didn't put out a statement. So we don't want to get caught up in it. We want to wait for the reversal to happen. A good sign here would be if this thing gets back below $6, we think it's going to keep going lower. There's probably going to be some buyers at 6, which there have been, and they might keep it up. But if that $6 level breaks, meaning the buyers fill their orders and leave the market, there's a good chance it can move down a lot lower here. So we're talking about buying it if it closes below 6. I guess technically it closed below 6 at 5.99 here. But I just think that this, this move here was kind of smoke and mirrors kind of thing. Well, actually, I don't want to say smoke and mirrors because I don't want to imply that the company is doing anything wrong, because they haven't had a news release. Let's not forget, when this thing started its move, this was still considered a penny stock. So maybe this just got caught up in, some penny stock chat room or somewhere, and it blasted higher. But there are options on it. And that, Rodrigo, this is kind of what we do here, right? We're not really looking for things that are overly complicated. We just want to focus on these fundamentals of important levels, momentum, and what the trend is. So this, I think this is, there's no guarantee it's going to work out, but I think having these things go our way kind of stacks it in our favor here.
Yeah, the thing is that a lot of people, look, I already kind of went over this, but it's since in the year 2020, obviously the news did their part, right? And but everything was going up, so everybody just kind of looked at this as a casino. Everybody got into the stock market with the wrong mentality, right? It's good that they got into trading and investing, but maybe the reason they got into it was not the right one, and a lot of them have had to rethink, do I even know how to do this, right? And I'll tell you that winging it is not a great strategy. I've tried it. I literally, I blew up my account twice when I was starting to trade. So it's something that I see happen every single day to doctors, lawyers, dentists, all people from all sorts of industries, really smart people that you would, but at the end of the day, the stock market doesn't care about your degree, doesn't care about a lot of things really, but that's really why you have to learn the ways of the market, right? So the stock market is talking to you in a language, right? That language is represented in the charts. You and I will talk in English, and we have a set, letters and words, whatever that, mean something. The stock market will talk to you, but it's going to talk to you in the language of the charts. So your job is to be able to educate yourself in that language, because you're learning a new language and it's being discussed, and the market is telling you exactly what to do at the right levels and the right, price points. But you need to be able to talk that language. Otherwise, you're not communicating. You think I'm saying something and I'm really saying something else. And that's really how I feel about the whole trading school, where you show people how to find trades, you show them how to find the right levels. Could it take somebody longer to learn something than somebody else? Of course. You have people that teach themselves how to become engineers or whatever crazy stuff, and since they're kids. And then you have people that have been failing engineering class for 30 years. So it's really about finding, again, the right community, the right tools with the right mindset. And really what we're doing here, Mark, is educating retail traders, and through the education, trade ideas will come across, right? But that's done through the lessons, and that's done like that for a specific reason, right? Because we do want them to be able to apply these concepts if they want to make their own trades, things like that, right?
Yeah, no doubt. So Rodrigo, do you mind? Can you give the students a few more details of the class here? I'm just going to take I'm just going to take about a 2-minute break to go powder my nose, and I will be right back.
All right. Okay, guys. So what I'm going to do is that I'm going to pull up the school, because a lot of you guys have been emailing me and messaging me about this stuff. So I'm just going to take a quick moment, and I'll show you the stuff to you, everyone. Okay. All right. So what you're looking at right now is the monster, the machine of the trading school. Let me make this wider. This is the homepage. This is where we are right now. And in the top, I want you to focus here on the top, right? You have homepage, which is where we are right now. You can go through to, Thursday, Friday. You see what's happening throughout the week if you want to go over some of the lessons. If there is a live session, right? Anytime 7 to 9 a.m. and 12 to 1 p.m., you click on live and you will go to the live class, and you'll have a chat room just for that class, so that you can ask questions on the actual lesson, all that sort of stuff. If you want to find the recordings, because maybe you have a 9 to 5, or you weren't able to attend the session for whatever reason, you click on video library. It's going to take you exactly to the video library, which is basically where you have all of the recordings. Sorry, you have all of the recordings, and that does include Q&A sessions. That also includes the office hours that we have on Friday. So every Friday we have office hours. We recap what we go over the entire week, and the schedule, guys, it's pretty much Monday to Thursday, 7 to 9 a.m. and then 12 to 1 p.m. Friday, you're meeting once, 7 to 9 a.m. You only meet one time, and it does come with Benzinga Pro. That's what I'm showing you guys here. This is where I log in, and that pretty much is included with the school. So if you guys get the trading school, you get Benzinga Pro. Now, back to the video library here. So in the video library, you're going to be able to find all of the recordings. So today's class, investment psychology, this is where you have the recording. You have the Q&A session as well for that class. Chart patterns, Q&A patterns, Q&A momentum, Friday office hours, momentum. I mean, you have every single class. You have the Q&A, and you have the review. So at least 3 hours a day class. The other cool thing, right, that I want to show you guys are the chat rooms, right, that we're giving you here today, just today, right? So we have a chat room for student, and keep in mind, you have sound notifications here, okay? Sound notifications. Shout out to Tammy for pushing this out as well. And also, we do have to welcome here a new member. Shout out to Mr. Tony. Mr. Tony, welcome to the fam, sir.
Welcome, Tony.
All right. So, yeah, I'm just plowing through this, Mark. So in the chat rooms, you're going to see you have student trade ideas. This is where the students are posting all sorts of trade ideas, setups. This is a new one, Mark. What is student plan project chat? Where's this chat room? You guys?
That is from Born to Be, who is one of our one of our dedicated students who I look forward to talking to every morning.
Mhm.
But what students are doing is, now that some of the students are learning a little bit more, they're putting in their plans so other students
Okay.
can look at
Yeah,
them.
like a trade plan. Okay. Yeah. So basically put in your trade plan. Now we also have the student trade ideas as well, guys. Feel free to use them both. We have another chat room called Mark's Trade Ideas. That is where Mark will be posting like actual trade ideas. We have class files. If you do want to have a quiz, quiz yourself, you can always do that. Keep in mind, it does come with Benzinga Pro. So everything that you're seeing, right, including the pro side, whatever it is that you want to pull up here, the Qs or Tesla, whatever it is, feel free to do that, guys. It's included. Damn, what a bounce on the Qs, Mark. But yeah, I just wanted to show them. I just wanted to show them the school platform, where the recordings are, all that stuff. So we went over that. Sean, you got it? Cool. So yeah, and if anybody wants to join, I'll post the link, but let's go ahead. Let's get back here on the grind, Mark.
Okay, let's see. Go back to. All right, so I guess one of the things that we get a lot of questions from people about, especially from our day traders. So this is just something I wanted to point out. A lot of the day traders are like, how far back should I look on charts? And my attitude is, kind of far back. Like this Kodak could be potentially a day trade. The idea is this, right? We're not trading just based upon what is going on in the day. If there's no news on a given stock in a particular day, well, there's probably not a chance it's going to make a big move unless there's some kind of interesting technical going on here. So for example, today, it was only 19 cents, but that's a 3% move. That's a big move with Kodak. So the idea is, and I can show you a couple of the trades that these are somewhat out of date, but they're a month or two old. But I just want to show you a couple of the things that we look at when it comes to day trading. We do have a lot of shorter term traders. So this is kind of based on this thought of we're using longer term dynamics to make shorter term trading ideas. So let's just look at this here. All right. So this is this thing called West Fraser Timber. And this goes back to a little farther back than I thought. This was December, but we have more recent ones. But anyway, what do we see here? Well, we have, and this is we're for these particular examples, we're looking at this through the prism of, what would a day trader do, or what would a short-term trader do? So we look at this stock here, West Fraser Timber, WFG is a symbol, and we see that there was resistance at $92. We also have this, what we call an ascending triangle type pattern, where we have the sellers who have kind of hung out and stayed at 92. So they've been kind of complacent. They've been kind of okay with just hanging out, waiting for the buyers to come to them. So the sellers are kind of chill and complacent. But as time goes by, the buyers are willing to pay higher prices. See, there's been a big mass of sellers hanging out at 92. That's why when we get up to 92, we stop going higher. But as time goes by, we see the stock is trending higher, and that shows the buyers are becoming more aggressive at the same time that these sellers are still up here at 92. So we have complacent sellers who are just kind of chilling, waiting for buyers to come to them. We have buyers who are becoming more anxious as time goes by. This sets up the stage for a big move higher if we have a breakout. So this turned into a day trade. The idea was, if WFG gets above $92, let's buy it. It'll show us that this resistance is broken, which means that the sellers who created the resistance with their sell orders have either finished or canceled their orders. That sets the stage for this move higher. So what did we do for a day trade? Well, around 10:30 in the morning, the $92 level was broken. So a bunch of the people jumped in around 92.50 or 93, trended higher over the course of the day. And because we're day traders on this example, we got out at the close, which happened to be around 97. So, a $5 profit on a stock in one day is pretty darn good, especially if you're an options trader. So it's an example of looking at a longer term dynamic to make money in a shorter term time frame. So this is a little more recent here. So this is Facebook. So let's see what we got going on here. So the important $325 support level was identified, right? We can see that. You don't need to be a chart guru or an expert trader to see that. Oh, gee, every time this thing got down to 325, the buyers put a floor in it. And it's the same principle we talked about before. We have a bunch of buyers who bought the stock, and when it went lower, assuming they still owned it, think that they made a mistake. Now on paper, they're losing money. So we have a lot of these investors who bought the stock, they become remorseful. They decide they made a mistake. They regret buying it. But they don't want to lose money. So what do? They tell themselves that they are going to sell at the same price they bought at so they can get out without losing money. They can get out of break even. So it wasn't surprising that we ran into resistance around the 325 level. Right? So it was not surprising. So now we see that this stock has reached a level that has kind of been important over the last few months. And remember, we're thinking in terms of a day trader. Just because you're a day trader, it doesn't mean you only look at the 1-day chart. You want to know these longer term dynamics because that's what's going to move the stock. So we have a stock here that got to important resistance, and we thought there was a chance that it could sell off. Now, if we look at this 1 day here, February 2nd, look at what we see here. Every time we got up to this, I tightened it up a little bit, 324.50, got up to there, it's sold off. So if you were a day trader, you could have really kind of minted money off of this, buying puts maybe every time it gets up there, you expect to sell off. So by looking at a longer term time frame, we can make a shorter term trade. I really like this example too. This Domino's Pizza. This goes back to January 3rd. So looking at the longer term time frame, we see that Domino's is overbought, and this 550 level was resistance. The stock got overbought. It broke the resistance, but it got overbought. So now let's look at here. Let's review this. So
and we're gonna quiz them. We're gonna quiz people on this. So right after this.
All right. Well, I'm gonna this is a spelling error here. This should be overbought. So my apologies. I'll fix this. But DPZ was overbought from a longer term perspective. We know that because it got above this red line here. This upper red line is 2 standard deviations above the 20-day average. And that's important because statistics tell us that 95% of all trading should be within 2 standard deviations of the mean or the average. If something exceeds that, we get to the reversion. This goes back to what I was talking about with overbought and oversold. When things get overbought, they tend to reverse. When things get oversold, they tend to reverse. If something is overbought, it's been moved higher, it could sell off. If something is oversold, it's been moved lower, it could move higher. So overbought stocks tend to reverse. So the next step is to look at our resistance levels and support levels. The 550 level was important resistance. So levels that were resistance can convert into support. So we identified important short-term levels, and the breaking or failure at these levels led to a really big profit literally in a matter of just a few hours. So we have an overbought stock from a long-term perspective, and we have a level that was clear. 550 was resistance. So now let's just jump ahead to the 1-day chart here. this, or I'm sorry, this isn't a 1 day, but this is a closer. This is like a 1 month. So we saw this overbought stock. We were expecting a reversal. We looked back in the short term. What was an important support level over the last few days? Turns out 557 was. So the trigger to get into the trade, to actually make the trade, just because it's overbought is not enough to get into the trade. You have to wait for the reversal to start. That way you stack the odds in your favor. So when this 557 level broke, that was the idea, to get in and buy puts in this case, or short the stock. Most of the students just buy puts though. The thing came down and we covered here at 550, which was the level. Ended up going way below and coming all the way back. But this is a stock that moved a good, good 5 points, 4 points in maybe a half an hour. So this ended up being a good day trade for a lot of the people, a lot of the students. Same thing here with this overstock.com. We're looking at a longer term price thing here, right? A longer term dynamic. For the past year, the $60 level had been support.
Right.
Around here, we got really oversold and we got to support. So oversold stocks that get to support tend to rally. What would have told us it was going to rally? Well, if it broke that important short-term resistance level. So this turned into a nice profit too. So the concept, Rodrigo, is if you're a day trader or short-term trader, you don't want to just trade in isolation. You want to look at the longer-term perspective too. And that ended up being some really profitable trades for some of the students here.
Yeah, and a quick shout out here. Gary here, welcome to the family. Gary, new Benzinga Trading School member, guys. I mean, this is really what we do all day. We're just giving you guys a sneak peek of some of the things, some of the trades that we do in the school every day. But Mark, let's take a quick pivot here. Pull up your charts and just give me a rundown of the markets, what you're looking at, what are the levels, anything of that nature, right? So pull up your charts or whatever you're using there and go over everything, right? Let's touch a little bit on Ukraine. Let's touch on inflation. Let's give them a little touch of what we do on the school. Let's show them.
Well, every day we review what is going on in the different sectors and so forth. And because inflation is such an important thing now and energy is such an important thing, in the morning when we're going through these various things, we're definitely going to take a look at oil to see what's going there. And after becoming overbought and then oversold, I think we're back into an uptrend here. This is a pretty interesting example here of how a level can be important, resistance and support. So when oil got to here in February at 95, there were people who sold it. It went lower, but then it went higher. So now instead of buyer's remorse, we have seller's remorse. A lot of the people that sold tell themselves they made a mistake selling and they want to buy it back. But they're only going to buy it back if they can get it for the same price they sold it at. It's the exact opposite of why a support level would become resistance. Now we have a resistance level that becomes support. So when we went in, we got overbought here on the fears of the Ukraine, when Russia went in there. But, it got overcooked. I guess you could kind of call it panic buying. But then, like markets do, when they get overbought we get stretched out one way or the other, they reverse. And that's what happened here. Now, where did the sell-off stop? Well, at 95. Why did it stop at 95? Was it just a random coincidence? No. It's a level that was resistance. So levels that were resistance can become support. So now it looks like oil is going to, getting back into its uptrend, still having a bit of a longer term uptrend, but after this extreme volatility, I guess we could call it, we're kind of settled down, but we're still trending higher here. So we look at that. We're going to look at natural gas because I know a lot of the students are in this and we could be having a breakout here. Then we're going to look at the stock market. And we always start with the S&P 500 because that's like the broadest benchmark. And while we're doing this, we're looking for trading ideas and we're looking to see what's going on here. when things get to important levels, what happens? Now, I think that this S&P 500 here, this is one of the reasons why I think that this bear market correction we could have just seen a bear market correction and it could be over now. Now, am I guaranteeing that? No, the charts will ultimately tell us. But look at this here, right? If we go back to this whole concept of price levels that we've been talking about, look at this here, right? We got up to, this is the 450 level, 450-ish. Remember, it's a zone. I use these single numbers, but let's pretend it's a zone. You know, I don't know, 448 to 452, 453. It's a $450 price. So $5 is nothing. But resistance back in here in September, support here in December. Looked like we were going to make a breakout twice in February, but it didn't, and we had this reversal. Now we're right back up here to this level after this move higher. So there's a good chance things stall out here just because we've gone back to where we could see some resistance now. It was a support level. It was a resistance level. What is going to tell us whether this is going to move higher or move lower? That's going to come from looking at the components that make this up. This S&P 500 is made up of 11 sectors, and sometimes the different sectors drive it at different times. So lately, the tech sector has been driving it, and this is one of the reasons why I think we might be able, or we might be looking at a little bit of a stall out here or a reversal. Well, after this big move higher, about 15%, tech has reached a level that was support, and there's a good chance there's a resistance there. So, it's not this complicated thing. I just think that this dynamic of these important levels, while everyone else is going to be focused on Ukraine and this, that, and the other thing, we're, as traders, we don't really care. We don't want people's opinions. We want to just see what the market is telling us. The market's telling us there's a good chance there's a resistance here, and already has been, frankly. I mean, today we got up to 157.52, so we're pretty much right there. So this is something that we look at. Right. And we're going to look. So then we're going to look at some of the other sectors. Healthcare is the second biggest sector. So we look through that. So we go through these sectors, and if we see something that's really overbought or really oversold, then we delve more into this sector to see if we can turn into some kind of a trading idea that makes money. I mean, we're not just doing this just for the sake of doing it. We're going through these markets to look for stuff that's out of equilibrium, because if something is out of equilibrium, there's a chance it moves back into equilibrium, and that's where we can get our trade ideas from.
All right, and there's a couple questions here, Mark. I'll just go over these questions with you. You can help me as we go, and just make sure, guys, you post your questions in the everybody chat, not in the private chat, so everybody can see them as well. Okay, so, and B Matt says, thanks, Matt. Thanks for your insight, Mark. Okay, so yeah, first question here, Mr. Petrino. So I have a question here. Do you review student trade ideas in the school?
Yeah, yes, I do, if they ask me to. Some of the student trade idea chat, I try to stay out of that. That's really just for a student exchange. It's one of the chat rooms. But if they ask me, then I certainly answer. So students come up with plans amongst themselves, or at least that's what I want them to do. But then if they have any ultimate questions, or if they want me to review it, then I do. So the answer is yes.
Okay, all right. The other question I have here, are the sessions recorded? Yeah, all the sessions are recorded. So that's correct. Next question here we have for Mr. Mark Putrino. So are these live classes with the current market, or are these I guess just things that you already have preset, or is every lesson to within the current market situation?
Dude, we're live, man. We come live. We come live at 7 o'clock Eastern every morning.
Okay. All right. Another question here. Does it? Yes, and I could take this one. Yes, um, everybody that joins will get a free laptop. Correct. Next question here I have for you, Mark. Um, now so even if I am trading options, this can help me um, become a better options trader if they join the trading school. It's a question for you.
Oh yeah, there's no doubt. Like those examples I just showed with Domino's Pizza and Kodak, if Kodak works out, yeah, I mean those are really good ideas for
Mhm.
options traders because those are stocks that potentially could make a big move in a very short period of time. So we have a
Okay.
lot of options traders in the school.
And that would apply to crypto as well, right? Because I got two questions about that. Crypto as well, even if you're trading crypto.
Yeah, crypto. We even have some foreign currency students. Basically, these market principles apply to any market as long as it's liquid enough. So the same chart patterns form in cryptos as form in stocks as form in various other things, and those could show you a move is coming where you could take advantage of it with an options position. So yeah, absolutely, we have a lot of options traders.
Okay. Okay. Next question here. Do you teach the psychological trading aspect?
Yeah, our class number 6 is all about investment psychology and what are the most common reasons why people fail. And it's because of their emotions. They guess, they panic. So yeah, that's why we have a class dedicated to investment psychology, because it's one of the most important elements of being successful.
Mhm. Okay. All right. And another question here, really good one. So let's say if I were to start the trading school today, right, and I attend every class, right, assuming I am totally new, right, um, would this be considered like an introductory, like for new traders? Would this be for new traders or for experienced traders? How would you answer that, Mark?
It's for all levels. And it's almost better for new traders because they don't need to unlearn stuff like some of the more experienced traders do. You know, like if someone's really experienced and they're joining a trading school class, it's probably because they haven't been doing a very good job. So they're at a disadvantage to someone who's new because they have to unlearn all the stuff that they learned, so to speak, and forget a lot of things. So we have all levels, experienced, unexperienced. The only prerequisite, Rodrigo, is that we want people that want to learn. We don't want people that just want to pop in every day and be given a trade idea and then move along. It's a trading school. It's not we're not selling trading ideas here. We're selling an education so people can educate themselves to come up with their own trading ideas. So it's a whole different thing. It's the whole, we want to teach you. We don't want to just give you the fish, right? We want to teach you how to fish type of a thing.
Okay, and quick question here from Mark. Well, from a guy named Mark too. Is this only for one trading style, or is this something that can help people that have different trading styles?
Any style that you trade, if you know where these important levels are and what the trends are and what the momentums are, it will benefit you. You could be a really short-term day trader, or you could be someone who's a long-term buy and hold investor. Any style that at least I'm aware of in trading, I think it's a benefit. Because whatever style you have, it's all going to go back to the same fundamentals. And we're teaching the fundamentals.
Mm-hmm. Okay. Yeah, we have another. Yeah, and that's true because look, I trade options, Mark, and as soon as I started, getting up to speed with the trading school, I noticed my entries were getting better. And you know how calls are. Once, it could dip when you buy it, and even if it comes back to the same level, the stock price point, your call's not going to be the same. It loses some premium. So, me as an options trader personally, I've been getting a huge benefit from learning how to read charts properly, accurately with Mark, and it's given me better entries, which is pretty much more money in my pocket when I'm trading calls in and out. And I have a faster way of trading calls and puts, but without knowing how to read a chart, you're just going to lose all your money instead of a percentage like you would in stocks. So that's a good one there. Someone's asking, is there a money back guarantee? Yes, there is a 7-day money back guarantee. Someone's asking, how long will I have Benzinga Pro for? As long as you have the trading school, you will have Benzinga Pro included, and we do have live lessons on how to use Benzinga Pro exclusively for trading school members. Um, yeah, I mean, that's definitely a lot, Mark, because if you think about it, you're there like 700 hours for the year with these people. That doesn't even count the time you're putting into the lessons outside of school hours, um, you know, discussing things with students, making sure you're finding trade ideas for them, making sure you're like all that stuff, it's just so consuming. Did you think that teaching in the Benzinga Trading School would be like this, or what were your
Let's see, what did I think this would be like? um well, this is more fun than being a trader, that's for sure. But I think what kind of really kind of shot, because you have to remember, I mean, I was in the institutional trading world, and then a lot of the people that I'm friends with, have real trading experience. So when I came over into to teach and to learn some of these issues that the retail traders have, I was really just kind of, I guess not, I wasn't like incredibly shocked, but I was surprised at just the myths that are out there in Wall Street, like, what market makers do, like, oh, is a market maker,
There's a
market
lot of
makers are,
disinformation out there. Yeah, I know
yeah,
exactly what you mean. Yeah.
market makers are out there to rip off the little guy. Well, guess what? I was a market maker for 2 years, and I never once thought, oh, gee, let me figure out how I can go rip off the little guy. That's just not how it works. Or these, the myth we talked about a lot, that how some hedge funds have these secrets, that's a myth. But it really surprises me at how misunderstood what really goes on Wall Street is. Or I mean, I guess I took a lot of it for granted because I worked there for 25 years or whatever. Um, but it's surprising to me how much misinformation or how many misbeliefs there are out there. Like this whole concept of the hedge funds are the big guys and the oligarchs or whatever. Who do you think the hedge funds are managing money for? Hedge fund clients are pension plans. Who has pensions? The little guy, the little person. If you're a teacher in some state and you have your money in your state pension plan, well, your money might be being managed by a hedge fund somewhere. So this whole myth that it's like the little guy versus the big guy is just a complete misnomer. And a lot of that came out of all the the bogus information about the whole Reddit thing last year, and the alleged Robin Hood shutting down stuff. So, to prevent,
Yeah.
to help the hedge funds that were short. I mean, that was all BS, man. That's not how it really works.
Yeah. I mean, it's just, yeah. I mean, but it kind of sucks that they didn't let anybody, um, regardless of the conspiracies, they shouldn't have just locked people out like that, but either way,
Well, the
it's,
problem is though, a lot of people would have lost a lot of money.
they did.
Then they would
They
be
did.
suing GameStop. I mean, they would be suing Robinhood. So, Robinhood did not shut trading down because they were in collusion with some hedge fund.
No,
Robinhood shut trading down because they didn't want a lot of people to lose a lot of money that can turn around and sue them, saying you shouldn't have let me make that trade. So we talk a lot about things like that in the class too.
yeah. I mean, there are a lot of opinionated students, which is fine. That's what the market is, a bunch of people with a bunch of different opinions. But that's really what makes a market, right? I mean, I'm not trying to get into it with Robin Hood or with Mark, to be honest, guys. That's just, I could, trust me, we got bigger things here to cover. Jose, in the Benzinga school, does Mark go over on how to select options? I don't know, Mark, what do you say?
Yeah, we do. Yeah, we look at options.
Like basic stuff, right? I mean, because it's not like there's a class about options, Jose, but I mean, that doesn't mean that Mark can't kind of guide you with the basics, which is really what some people are just looking for, right? Just the basics.
Yeah,
right?
yeah, we teach basics. Like if we look here, this, like how to read an options chain, what all these mean, how to see.
That's new. I haven't seen that. Damn, Mark, you are stepping up the game there.
This actually goes back to a coulda, shoulda, woulda trade. Look at this. US Steel was at what,
Oh, yeah.
19. Where is it now? Like 35, 36. But
You're right to
I
buy.
don't.
Oof.
We talked about this. Maybe some of the students did buy calls. But yeah, we cover options. We cover the basic stuff of how to kind of figure out which one's the best one to buy, which one's the cheapest one to buy. And people have different styles. Some people like buying calls or options that are in the money. Some people like options that are out of the money.
And to be clear, right, this is just from a tradable perspective, right? This is just from a tradable based on your technicals, because like with Tyson Food or with these oil trades, you give out the levels, but I go out on my own and I go and buy the calls that I want, because I know how the like the volatility closer to the expiration date. I know how that all works, but I just need to know the levels. And that's what you give me. And a lot of people are there where they know how to trade options. They know that if they go far out, it's less volatile than if you go shorter in time, but it's just the levels that people have issues with. And I know a ton of people that literally trade options and all they do is go by your levels. So for example, right there where you, let's say as an example, you would have put $19 looking like a good entry here for X. Well, they would have probably bought calls maybe on a shorter time frame there. Not that you told them to buy calls, but that's how they trade. They want to trade the options, but they need somebody that knows how to read charts to give them the levels. Does that make sense? That's why this piece is in so well together.
Yeah, because say you're right about something in the sense that you're right that a particular stock is going to move up or move down. Well, there's a lot of different ways to trade it. And this is why we talk about these things that, people have different styles, and what's good for someone might not be good for someone else. Like this US Steel thing here, right? We know hindsight's 2020, but say we were right and say we said, hey, we think US Steel, and that was actually down here when it was around 19, but say we're right. We think US Steel is going to go up. Well, there's a lot of different ways to trade it. Someone might just buy the stock if they're a conservative investor. This is a steel company, so it's not going anywhere. It's not like it's going to, it could be like a biotech stock or a penny stock that drops 90%. You know what I mean? Like this is US Steel. It's a blue chip. It's about as blue chip as it gets. Oh, look at this. Actually, one of the students made a bet with me. So this is something else, dude, they can check in for, Rodrigo. I forget when this bet was made, but I think it was probably a few weeks ago. I think the stock was down here. One of the students said, Mark, do you think US Steel will get to 38 by 331? And I said, yes. So I put that on the chart. So that's their set in stone. But anyway, if you know
that was $19 when you said to buy.
Oh no, I think the bet was made over here. I think the $19 that we just showed, that was back here. But after we broke this resistance at the $29 level, I forget which student it was, but we kind of, not that we're betting real money or anything, but someone just said, hey, do you think there's a chance this gets to 30 to 38? So I wrote it on the chart here and saved it. But if you're right about which way something's going to move, there's a lot of different ways you can play it. And that's why it's a trading school. Like someone might buy options, someone might buy the stock, someone might want to buy out of the money options, someone might want to buy in the money options. There's just so many different ways to trade it. There's no right answer. It just has to go back to what fits your personality and your style.
Right. And here's the thing. I was actually trading X, but I'm talking about last year when this thing was in that $24, $25 range. Eventually it topped out at $30 and I'm like, the hell with the shit, like I'm going to go trade something else. And, this is really, again, I can't go by a minute without highlighting the benefits of the community where everybody is helping each other out, because I lost track of this stuff. I'm not in this trade now, but I wish that in the school, you guys, it's hundreds of eyeballs. So everybody's passing out charts. I cannot go through hundreds of charts myself. I got stuff to do, but the students collectively, right, together as a team, working as a team, they're always sharing trade ideas. And then you might be like, oh, wait, I traded that. You're telling me it's about to break resistance. It's about to break resistance level right now. Let's show it up to Mark. So I'm not able to keep track of all these many stocks. Now, what helps me a lot, Benzinga Pro helps me a lot. What else helps me a lot is really the community, because it's a constant idea flow, constant trade flow, right? Where it's back and forth, back and forth. And once you see a chart like this, look, assuming you'd be looking at this chart on 2022, as it's literally breaking through that prior resistance, right? I mean, you'd already at least be on alert. And if you miss the first run, you literally have it come back to that support level that you so beautifully marked there, Mark. So this is really the power of the community, where you can actually work together, and then we bring you the trade ideas, just like students bring you trade ideas, Mark, right? And you chop it down with them.
Yeah,
So I
like
just feel bad
Kodak
that
was
I'm not
a
in this trade, because I was in it all year and I'm not in it now. So I feel bad, but that's because I'm not in the school. I'm not there all day with everybody else, because they're sharing these trade ideas. So it's ongoing. That's what I'm saying.
yeah, like that Kodak wasn't my idea. One of the students pointed it out. Um, so yeah, I mean, it's a student involved thing. That I went to business school at New York University Stern School of Business, which is a one of the top, I don't even know what it is, top 10 business school or whatever. I think it was number 12 when I went there. Regardless, it's a top business school. All right. And guess what? Out of all the classes I took, there's only two that I really remember very well. Okay. I mean, this was a long time ago. This was in the 90s. But one of them was my public speaking class, because the class is basically you would just go in there and have to speak in front of the rest of the class, which is a very good skill to have. Public speaking. The other class was taught by a guy by the name of Larry Zicklin, who was a phenomenal money manager, investment manager. I don't know if he's even still alive, but he was a huge philanthropist. And he was teaching our class on ethics at the time. And this was the class, Rodrigo. He would literally come in, and back then people still had, newspapers, like actual newspapers. And he would come in and he would put the newspaper on the desk, and it was a class on ethics, and we would just brainstorm. Oh, here's an article on this. What do you guys think of this? What do you guys think of that? Insider trading. Is it okay for an administrative assistant to trade on inside information if she found out that the person she worked for, was a banker or a lawyer and there was a deal? No, that's wrong. She shouldn't do that. Well, then someone says, well, what if she was feeding her starving child and she needed the money? There's no, like, it just delved into all these different ways, and it became a very memorable experience for me. And like I said, I only have really clear memories. Well, I have clear memories of other things too, like being mad at grades and that kind of stuff. But it was a class that really kind of stuck with me. A lot of it was learning just by hearing the opinions of the other students, because there are other students that are really smart and they can really bring out things that you would never even think of. Like with all the stuff that's been going on in commodities, a couple of the students know a lot about farming. They've been able to give us insight into things
The
like when
wheat
is the
stuff.
growing season.
Hey man, that wheat is traded in wheat and oil, man. That's the new high-end drug now. Wheat, everybody's trying to get these fertilizers and shit. So
yeah, well, that's kind of the thing with wheat. The question is are we going to go higher or not? And so my question was, we got to think about the growing seasons, the planting seasons. And right now, well, what is it, March? All right, so what I've heard is like April and May are where they start to plant wheat, right? A lot of wheat from the world comes out of Ukraine and Russia. If these farmers can't plant, and some of them, they can't, and if it's not, maybe they can plant, but maybe they can't get their products to market, because if you're a Ukrainian farmer, the ports are closed now. If you're a Ukrainian farmer, you can't get fertilizer from Russia, so maybe your crops won't be as good. So that may not have even kicked in yet. And maybe we start to see real wheat shortages and the price even goes higher later on. But this is, insight from people that know about the growing seasons. Some of our students maybe grew up on a farm or something like that. So
I remember that, like 3 months ago, 4 months ago, I was talking with this guy from the school, from the trading school. And he was trading cattle, wheat, corn, all that kind of stuff. And, I had a chat with him, and because look, I talked to thousands of traders, Mark. I talked to traders all over the world that sign up for the school. And this particular trader was a trader that actually traded the commodities, right? The corn, the wheat, the cattle, all that stuff. And he was telling me about wheat. Now, I have a background in like the agricultural equipment financing side. And, the thing is, he knew wheat pretty well. And he kind of already knew that Russia provided a lot of the wheat. So this guy was all over this trade. And I remember that at one point, maybe we were talking about it here, like on one of these sessions. And some trader was like, wheat, I mean, why would I want to trade wheat, blah, 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 all this stuff. But then look at what the NASDAQ has been doing, just crashing down, and look at wheat and look at all these commodities. So that's really why, I'm just trying to emphasize something, Mark. You need to have an open mind when it comes to trading and learning new things, which is part of the core ideal here at the trading school, right? That we want people to come with an open mind and, forget about what you heard from this TikTok kid or whatever. You need to, like, it's better for you to learn it from a real professional, somebody that's been in the game with the biggest out there. And, there's just no other way around it. So now a lot of people are trying to find out how to trade wheat, how to do this, and with stuff that they were laughing about 4 months ago. But look who's laughing now, right? So this is why you need to have an open mind, and you can apply what you learn in the trading school when you're trading commodities like wheat, corn, all this other stuff. And I think it's great that you have all these people, Mark, in the trading school, because now these commodity traders helped a lot of option traders, crypto traders, stock traders. It helped them balance their portfolio because the majority of traders were down and have been down all this time, except for those that were buying these commodities and things like that, like we were in the trading school for all these months.
Rodrigo, I think it's important to point out for some people that we can get exposure to these commodities through the ETF market. So if you want to take a position in wheat, you don't need to go into the futures market. You can trade this ETF, WEAT.
And I know that you're going to go. You have more tickers and setups that you're going to show them tomorrow in the class, right? I mean, this is just one of them, right? But you're going to show them more, other things tomorrow, right? In the class for those that join, of course, right? Because keep in mind, this is a sneak peek. This is a sneak peek of what you're getting.
Yeah, I just wanted to point out to people, though, that just because you don't trade futures, and a lot of retail traders don't, you shouldn't feel as though you cannot get exposure and make money to these things. For example, WEAT is a wheat ETF. It's behind the scenes. There's all kinds of futures and God knows what else. But for you, for the regular investor, it trades just like a regular stock. You can buy it and sell it just like a regular stock. You don't need to worry about, what's going on behind the scenes. Had you bought this at the beginning of the year, like Rodrigo said, when the stock market first started to fall apart, all right, you bought it at 730. It got all the way up here to 12. Now it's back down to 10, but that's still a huge move. We talked about UNG. This is an ETF that students or investors can use to get exposure to the natural gas market. There's a corn ETF that we look at, believe it or not. This same family, I don't even know if I'm saying this right.
There's a lot. There's definitely a lot. But basically in general, right, guys, like you don't have to just sit on the sidelines and just wait for the NASDAQ or the stock market to hit new all-time highs. There are tools that we use inside the Benzinga Trading School, so that it really does not matter what's happening out there. We will find, different trading vehicles, right, for you guys. So that's something that Mark does every day for all the students. So let's just say everything chills out in Russia tomorrow and none of these trades apply anymore, right? Then something else happens in some other part of the world. Mark will know what kind of vehicles we're going to be using for trading. So volatility is our best friend, and we're basically learning how to dance with it. That's what Mark is teaching you guys in the school, right?
One of the things that people have on their radar screen, I think it's probably time to sell, but a lot of the students are making their own minds up. And some of them are holding on to this, and I'm not always right. I like the feedback, but this is our kind of things settle down in Ukraine play. And I don't want to say settle down because it's such a terrible thing with so many people have lost their lives, and there's these war crimes being committed and everything. But if Vladimir Putin gets assassinated, or all of a sudden they say, hey, we've come to some negotiated settlement, this thing is going to skyrocket. This is the Central Eastern European Fund. The symbol is CEE. And this is actually in the, Rodrigo, when you showed the people the Mark's trade ideas from the chats, this is in there. So this got on the radar screen because of what is going on in Ukraine, right? This thing fell from, let's see, 21 all the way down to below $8. And I think this might have been something one of the students pointed out too. At this point, I don't really remember. But the deal was, or the idea was this: well, there's been this ceiling of sellers, right? Or a large group of sellers at the $8 level. This is $8 here. They kept a top on it. So the thought was, buy this if it breaks above $8, meaning trades above it. Why? It's not magic or anything like that. Let's think about it in terms of supply and demand. This amount of supply, this large group of sellers, was at $8, and they kept the top on prices. Every time it got up here, they knocked it down. What happened on this day? It got above that. That was the time to buy. So a lot of guys, or a lot of students, got in at 810, 815. Now it's up to 980 in just 3 or 4 days. So
let me show this to them. Let me show this to them so they can see that, this is not just fairy tales and butterflies.
Yeah, if you go there, you should see the buy idea. And so that was
I got it here.
Yeah. And then if you go
Friday.
So that was Friday. What's today? Tuesday?
Friday.
Last
Friday. Yeah.
Yeah. And then today I put out the sell on it.
Okay, so this is a clear, and there's several other trades that so these are all trades that every student gets. Is that correct, Mark? Everybody gets these all the students?
Yeah, there's
trade ideas?
Nothing hitting. We do everything out in the public forum and within the class.
Okay, so I just wanted to show you guys that this trade idea posted in the chat room from Mark's trade idea. This is included in the trading school again, right? Go ahead and take back the screen. I just wanted to show them like the actual entry post that you made. Clean,
show them what I posted today, or maybe it was yesterday.
Which one? What's the symbol? Tell me.
The same stock, CEE.
Today?
Yeah, keep going down. That's the codex.
Yeah.
Yeah, there we go. Keep going. There's C right at the bottom.
Okay.
Yeah, that's today. Today I said running out of steam. So this is the closing of the idea from last Friday.
Time to take some profit. So let me just read here your post, right? This was posted at 10:56 a.m. Eastern. Mark Putrino posting sell alert for CEE on the profit green. Seems to be running out of steam. Time to take some profits, but it's very liquid today. So use a limit order if you sell. You're even giving them the type of order. That's pretty nice. Shout out, Mark. And let's show the chart here. Yeah, it's running out of steam. 964 price, 964. I'm showing everybody right there.
Yeah, so this is it here. Yeah,
this is a sell alert. So this is pretty nice. So entries and exits. Got to give a shout out to Mark Putrino, guys. Shout out. And this is just part. It's just so fun compared. I'm just comparing this, Mark, to the way that most traders out there learned, right, in quotation marks, which is blowing up their account, right, and losing money. Instead, here you're actually learning real concepts, real strategies that you can use on setting up all sorts of trades, regardless of what you're trading. It helped me with options, anybody with options trading, crypto trading, forex trading, commodity trading, and it just seems to provide that sort of education, but also trade ideas so that you can make money while you're, so this thing also, you learn and it pays off for itself. So that's pretty nice.
Yeah, go to the one two pictures higher there, the XLK.
XLK?
Right. Yeah, now what day was that? So that was Friday.
Last Friday, 3:47 p.m. That's what it says.
Yeah,
Or
last Friday, but this past Friday, like 3 or 4 days ago. And I
yeah,
said,
not three or
I
four.
said, it looks like, we break in through this level. It looks like we can continue. So that was
Okay.
here. We
Okay.
broke.
Take the chart now. Take
Oh,
the
all
screen
right.
now and show
All
them that.
right. So you see what we put there. That was our from Friday. That was kind of I said, it looks like this move could continue. And then if we come up to here in the current time, that was, so when was last Friday? That was here. So when we broke this resistance, it told us we were going to get a move forward. So if you were trading this, and I know some of the students were, they got in around 152, and today we're approaching 158. So the stuff up there is real time. It's not like I just only post the good trades. I mean,
Yeah. Well,
if there's something that goes against us, I'm not going to hide from it.
I'm gonna be honest here. Yeah, I mean, you're talking about tech on this trade. So I was looking at the Qs, at the QQQ, which is pretty much covers tech, and I was trading those daily. Well, I mean, I trade what I was telling you about. Just weekly calls, weekly puts, short term from a tradable perspective. And on this breakout alert, actually, I was trading the Qs. So this was my Q for the Qs. So that when I could get long, right? And I mean, those calls, I'm not gonna go over how much I made on those calls. I'm just gonna say 3 digits plus, and it was basically just from Mark giving me the levels. Like I said, I already know how to trade options within the way that I trade it. I just need the levels, and when I get into Mark's trade alerts, I just look at the levels that he has marked out, and I trade accordingly, and that's it. I already have a plan. I have a strategy. I have an exit. It's pretty straightforward. Like Mark said, this is not rocket science. Okay, you get through the basics, you tie your shoes, and you're good to go. You hit the road, because if you have the education and you have the levels, you're going to pick up. There's no way. I'm telling you, there is absolutely zero way that you do this for a full year. Okay, a full year, Monday to Friday, and don't take anything. Don't learn anything out of it, because I know that a lot of you have already taken a lot just from this session. And Mark does this every day. And he goes way deeper. We're just scratching the surface here. What are we looking at there, Mark?
Well, I just wanted to make a quick comment on this C. I had never even heard of this thing, until 2 or 3 weeks ago. Like I had never even thought, I don't even remember, Rodrigo, how it came up. We were just brainstorming. We came across this. It turned into a profitable idea. I mean, I had never even heard of this thing, but I was just looking at the AMC and GameStop moves because it looks like there's some moves in the aftermarket here. I don't know why, but I mean, is it enough to turn the dial or turn the needle on these things? I mean, I don't think so. I'd have to look into what the news is, but I mean, put it this way, I
Well,
wouldn't invest in GameStop or AMC right now.
yeah, I'm noticing it's like it was at the if you look at AMC, I think it was at like pre-squeeze level, $15. I mean, $15. I'm not gonna say pre-squeeze level, but pre like mother of the squeeze.
Well, this is
Before,
something that
yeah,
we can. All right, you know what? Now this is great. So now I know one of the things we're going to talk about tomorrow morning. Why is GameStop and AMC making such big moves today? And is there a chance it can follow through? And if there's a chance that they don't follow through, then these could be ideas on the short side. Now, I
yeah.
noticed in GameStop's big move higher here, it's trading right around this important level where, let me get rid of this 136. I don't remember what that's from. But
Do you think
this
these
is,
are algos or, I mean, something, I don't know if retail's gonna,
I think it's
benefits.
probably people that have been so crushed that now they think things have turned and they're like really kind of throwing all their money at it, hoping to recoup some of their losses. But well, let's take a look over here on Benzinga Pro and just look for maybe there's some news that is driving this, but is it enough to turn it around? I mean, it'd have to be pretty darn good news. So, all right. So we're seeing some stuff here. I don't see any news. Let's go back to what we talk about with how we can easily check out a company's website. So if there's some really good news on GameStop, if they have a new product or they did a restructuring, it's going to be on their website. So let's just take a look. You type in the symbol, then you type in IR for investor relations. That should bring you right to investor relations. And let's just see if there is some important news that they put out that could be driving this move higher. And no, there's not. Last news was March 17th. I guess they reported the results. So I actually missed that. All right. So they reported here. So this move came after. So I don't know what's driving this move. It could just be a short covering thing, but this is something we can delve into tomorrow, because maybe it keeps going up, maybe it reverses or goes down. Either way, there is a chance to make money off of it.
That's really at the essence what you do at the trading school, right? If a student has a question, if somebody's, like X, if somebody's looking at X or another stock that really calls their attention and a lot of eyeballs are there, you pretty much break it down for them, right? So that's really good that besides doing the education, you also, analyze trade ideas from the students, on a daily basis.
Oh, all right. I see what's going on in GameStop here. It looks like someone who holds it just reported that they bought more, and it's this firm called, what is this firm called here? A big money manager, if they buy something, they have to report it. So RC Ventures just reported that they bought a lot of stock. So maybe that's why people are driving higher. But I think this could just be people are, just grasping at straws. Yeah, I mean, I think people are just kind of grasping at straws. I mean,
you wouldn't chase. So what you're saying is that you would not, because we don't want anybody to go out there and go all in with GameStop or anything here, right? I mean, you would not chase this move, Mark, right?
No, but I think potentially, it could be a trading idea. I don't think GameStop is going to turn around and get back to, $500 anytime soon. Maybe it does, but now what I'm thinking is that this thing has had a big move. It was up 30% today. It's up 14% in the aftermarket. So what are the odds that this just freezes tomorrow? Probably pretty small. It could maybe keep moving higher, or it could reverse. So what we're going to do tomorrow morning in the class is we're going to delve into this, and we're going to see if we could figure out what it is that's driving GameStop. And if it turns out that the news isn't as good as it seemed and people are just grasping at straws, hoping it turns around, then it's going to reverse and go down. And then we're going to have opportunities to make money on the short side, meaning we could buy puts. I would never advise shorting a stock like this, because something could come out in some chat room and it could be up 30% and you could get your face ripped off. But if you buy puts, you're limiting your loss to the amount you invested. So here's the thing. If the news that's driving this move is not good enough to justify it, it's going to reverse. If it is really good, it's going to keep moving higher. So we want to kind of go into it agnostic tomorrow morning. We don't want to have a set idea. It's going to go up or it's going to go down, because then we're going to be susceptible to like biases. But, this is a big move. And if the news that's driving it is not, I don't know what the right word is, worthy of it or whatever, it's going to reverse. I mean, I don't know what happened back here on August 24th, but look at this big move. And sure enough, it petered out. Then back here on November 19th, we had this big move and it petered out. So
I think it's interesting, Mark, that you can review this live with the students, especially from your point of view, since you are a former hedge fund manager. You've traded with, people like Steve Cohen and Mario Gabelli, people, some of the biggest out there. So you being on that, on that side of the business, how other investors and other institutional traders and investors think, right, and operate. So I think it's, and especially because there's a lot of drama around this stock. This is like the mother of all dramas, the GME, the AMCs. It's like,
yeah, there's almost like there was like a cult following with AMC. And I'll tell you, Rodrigo, I've been doing this for a long time, as you keep alluding to. But I will tell you this: last year, I mean, I'm sure I could find it if I really looked. In the AMC earnings report, the CEO himself said, "Don't buy our stock; it's overvalued." In my 25 years of doing this, I don't think I've ever heard a CEO come out and say, "Don't buy my stock." They didn't say it in those words, but if tomorrow we can even find the report and delve into it. The CEO basically said, our stock is not worth this much money. And this is the CEO. All right. So, the guy's got some good insight. He's the CEO of the company. So that was probably like after this big spike here. So we look at all different things. It's not just a set like, all right, well, let's look for levels. Let's look for this. It flows. It evolves. Every day is a little bit different.
It could just be a head fake. Yeah, it could be a head fake and just sucking people in again. New.
Yeah, like the big story that everyone's kind of been making fun of was how the AMC CEO, or was it the GME CEO? I think it was the AMC CEO, came out and used the term of like short sellers are like the dumb stormtroopers of Wall Street or something like that. Let me see if like this isn't just a lot of people have been talking about this. It's something he said on an earnings release or anything, and I just find it kind of funny that it's like, dude, your stock has gone from 50 to 20, and you're going to say the short sellers were wrong. It's like, well, they were right. Your stock went down. You know what I mean? So we delve into a lot of different things, but this gives us something really interesting to look at tomorrow, because these things are moving, and we're just going to see, are they going to move up? Are they going to reverse? Pretty unlikely that they stay unchanged for the next few days or so. So we're definitely going to be talking about this tomorrow morning.
Yeah, I mean, that's pretty much every day, right? So for the folks that are here, guys, Mark Putrino, basically former hedge fund manager under Steve Cohen, Mario Gabelli, chief educator at the Benzinga Trading School, where not only is he teaching people, how to trade in the right models and systems and parameters to use right around the trading strategy, regardless of what you're doing, options, crypto, forex, commodities, does not matter. But also giving you guys really good trade setups. We've already shown you several of them. And this is included in the trading school, right? On top of Benzinga Pro, on top of getting the lessons, on top of getting the recordings, the Q&A sessions, all that stuff back to back, Monday to Friday. You're also getting the chat room of trade ideas with Mark Putrino, guys. So that's a special we have till midnight. There's a 7-day money back guarantee, guys, for the whole trading school, everything I just went over. But if you are trying to do this on your own, if you're trading on your own, I'm just going to give you some advice. I tried it. This is not the time to do it. And maybe trying in 2021 or 2020, maybe 2020, yeah, it was different to wing it. But trying to wing it now it's a death sentence. Okay, you are asking to lose money, so you're asking to get whipped out. So my suggestion is to really find a community that makes sense for you, that you see, hey, I like this community of people where they're working together, they help each other. I like the instructor, he goes above and beyond to help everybody. He also has great experience in Wall Street with really, really, famous traders, worldwide known, right? Like Cohen and Gabelli. So, what are you getting? Benzinga Pro, all this other stuff. So, I mean, just you can connect the dots, right? You can put in the big picture together. The goal is to help retail traders. That's what we're here for, right? It's been long enough since, the big firms take advantage of the little guy. And we at Benzinga are pretty much changing that. That's why we're giving you the education with the right mentor and instructor, but we're also giving you the powerful, amazing tool of Benzinga Pro, which is pretty much the only competition, and I wouldn't even call it competition, but I'm just trying to figure out what to compare it to because it's so unique. The closest thing to a Bloomberg terminal that you will ever get your hands on. And we will go over Pro after, right? But I just want you guys to know this is the St. Patty special. Let's go ahead. And we were going over a couple setups here and things with Mark.
Well, Rodrigo, do you think you could keep giving the people some more details on stuff? Because this GameStop and AMC has really kind of caught my eye. So I kind of want to start delving into this here and see what we can come up with for tomorrow.
You mean like a setup for the school? Like you're trying to do some stuff for the school for tomorrow morning?
Yeah. I want to just spend some more time looking at game stuff because I noticed a couple of these other meme stocks are moving here too. I see Tilray. Yeah, Tilray is up in the post market by about 10%. I also see um, Canopy Growth is up 4% in the post market. So something's going on.
The
But
meme
this is what we
stocks. Yeah.
do. We don't guess.
Yeah.
We let the market tell us what to do. So I just want to look at why these particular stocks are moving so much in the post market.
Maybe the same shorts covering, maybe. I
I,
mean, it's the same
I
meme
have
stocks. No?
I don't know yet. I don't
Yeah.
know. But yeah, I want to get a head start on this so we can talk about it tomorrow morning because there's definitely something going on here. But it could be a trading opportunity. It could if the move could continue, or it could roll over and go down. We don't know yet. We just have to see what the market is going to tell us.
Mhm.
But yeah, it should be an interesting class tomorrow morning.
Right. And for the folks here, we do have a lot of trading school members here online, so shout out to you guys. But yeah, just make sure you're there in the morning, okay? Because you don't want to miss this kind of stuff. If something does end up happening, Mark will be the first one to let you know. Right. So that's actually where what he's going to be doing right now, right? So I'm going to be here with you guys, giving you some final details, right, on the school and some of the things that Mark will be doing tomorrow, where you can find all of that for all the people that joined. You can call it a little after party, call it whatever you want. But yeah, it's definitely been a great session here, Mark. We've gone over 2 hours, whatever. Like, I don't even know how much at this point, but it's been amazing. And it's always a great experience here to do this with you. Go over these sessions. I always learn a lot. People always seem to learn a lot and take a lot from these sessions. But yeah, so what are we going to be doing right now, Mark? What are some remarks you have here before we move on to the final details?
Well, I just hope I just hope we see some new faces tomorrow. I think there's a lot going on in the market. Like I said, I think any time is a good time to join, but now more so than others, because I think basically what we are on here is the verge of knowing over the next week or two whether we are in a bear market correction or whether this rally will continue. If we're in a bear market correction, you could basically bet that GameStop and AMC are going to roll over and go lower. If we're in a new, kind of up leg in the bull market, these things are going to go higher. So that's going to be one of the main things that we talk about tomorrow.
Great, good stuff. And guys, for all you guys that are here, okay, we're gonna stay. Well, I'm gonna stay here. Mark's gonna be on the back. Okay, Mark's gonna be on the background. You're not gonna see him or hear him or anything, but he's gonna be doing some stuff here for the school. And I will be showing you guys and talking about the trading school and going over any questions. Great session, definitely. And we're not done because we're still gonna go over pro.
Okay.
But yeah,
All right,
Mark's just gonna.
All right, Roger.
Yeah.
Thanks, man. I'm going to. Sorry, I'm just a little obsessed here. It's interesting that AMC is trading exactly at $20 because it's one of those round levels, but that's up 9%. All right, cool, man. Let me get into this, and I guess we can talk again either later or tomorrow morning.
Yeah, and Mark might pop in here later, so shout out. You never know, right? Okay, all right, Mark. We might see each other later today.
Okay, everyone. Talk to you later.
All right.
Thank you.
Okay, guys. So what you're looking at right now is the trading chat room where Mark Putrino is posting the trade ideas. We showed you this one, the XLK. Obviously, where this thing is at, like 158 or 159. So this was, another trade that was a good one, right, to take. And this is where you're going to look at the trade setup. So Mark, I don't know if he's going to post it now, but he might post a trade setup for GameStop or AMC. That's what he's doing in the back. I know you guys cannot see him or hear him, but I can, and he's there. But he's doing the stuff that he's like working on this thing for you guys right now. So basically, if you join, for those that joined, right, this is in Mark's trade ideas, in that chat room, Mark's trade ideas, that's the name. You will find the setups. And when he will post the setup for GameStop, AMC, any of these meme stocks that we might be doing a quick trade because maybe something happens. Who knows? It could be a long trade or it could be a short trade. And that's really why Mark does all the due diligence, all the research, saving you the time and all that stuff. So there's no mistakes, no rookie mistakes, none of that stuff. Giving you the levels. I'm probably going to trade this bad boy with calls. So I'm ready. Okay, I'm ready. If all this goes down tomorrow, trust me, I will be ready to buy calls. And I'm looking at Mark's levels. I'm looking at the chat room where he has the trade ideas. I'm not missing this one. Okay, so either we're shorting it or we're going to go long. Mark will decide. And this is where you're going to get the trade idea. This is the chat room where it's called Mark's trade idea. So for those that joined, okay, this is where you will get that. Somebody's asking, where do you get the recordings? So if you click video library on the top left, that's where you're going to get all the recordings of the sessions. You just pretty much click it. It gives you a full list. So, investment psychology, chart patterns, office hours, Q&A sessions, right? For every class has a Q&A session. Levels. So you have all this stuff, right? Today was investment psychology, and we might listen to a little bit of it. Maybe. All right. So now when it comes to pro, right, this comes included in what you're getting today in the St. Patty's deal. I do all of my charting in Benzinga Pro. I do not use anything else. I'm just not comfortable using anything else. I've been using Pro for years now. The charts here are amazing, second to second. So right now we're looking at a firm. This has been a long time favorite of me forever, way back, long time. So even before this thing was public. So I've been scoping out a firm, and this is something that, depending on where the market goes, we'll see what happens. If it's, we might just correct down and go just a lot lower. I don't know. But this is a great tool in Benzinga Pro to see real-time data, real-time charts, none of that delayed stuff, including after hours, right? And you have scanners that you can use for after hours, for pre-market. You have a bunch of tools that you can use, guys, that you're not going to find anywhere else. I'm a trader myself, all right? I'm not just talking here for talking. I'm telling you, these are tools that you don't have anywhere else, all right? So I want to give a shout out here to LRAM 1915, shout out. Shout out, my brother. Welcome here. Welcome to the family. Literally, this is going to be the last thing you ever get for trading. Okay, this is going to be the last one. Here is where it stops. All right. What are we looking at here? Is this a firm? Let's look at Mullen. Okay. I don't know if you guys remember, but I gave you guys Mullen when it was 99 cents. Okay. I want to show you exactly when that day was. I was using my Pro. I found it on Pro because I was using the scanner. And this is all recorded. You can look at. I was using Pro. I bought it right here, literally at 99 cents. This was like pre-market. I sold it at $1.75. And then look at what happened after that, right? It dipped below, it went all the way to 70 cents. It kind of made a gap up ladder there. You have one gap, two gaps, three gaps, four on this one, but then it reversed a bit. So I wouldn't be taking longs right now, but I'm telling you guys, you could have made a 400% winner with this. And this came out on my scanner on Pro. I even put it out there on like, all the stuff out there. So guys, you can find trade ideas like this on Pro. This is a beautiful tool. You're not going to find it anywhere else. Okay. Why? Because this is proprietary Benzinga technology. We built this thing. All right. A lot of people have put, like, we have a huge department just focused on improving what you currently have. You don't have to pay a fee. That's just our mission here at Benzinga. Continue improving what we offer you guys, right? Because we have all the data, all the tools, all the coding side of it, and we package it for you. Benzinga Pro didn't exist until it was created by Benzinga. So all of these tools that you're seeing here are fully proprietary. All these tools, you have pre-market scanners, aftermarket scanners, advanced news feeds, mobile push notifications. You have a lot of tools, guys, chartings, news, calendars, IPO calendars. You have a signals tool, you can really get in here and trade whatever you want. And I have a ton of videos. I've just done this so many times that I have a lot of videos, hours, hundreds of hours, okay, of videos showing you how I use Pro, like things that I adjust. Why do I do it? So anybody that joins, and let's say you want me to send you some of those videos, let me know. I can send you some of those. I can send you those videos so that you can do that on your free time whenever you want to really spend several hours at your own time going over, each and every one of these things. But you just have so much in Pro, right? And let's just show you something here really quick. Okay, so this is the scanner, guys. It's open. The scanner is open. You can scan aftermarket, pre-market, regular hours. You have different time frames. You can choose the sectors that you want. You can select the market cap and the price so that you can weed out some of those like, penny stocks and things like that. I really do not trade penny stocks. Mulin Technologies was a trade because it had other things there. Like it was just a different situation with Mulin. But I typically do not trade stocks that are like at $1 or 90 cents. Mulin just it just sparked my attention for many reasons. The news and a lot of different things. And also I caught it early on Pro on my scanner. So yeah, guys, so this is where I found that thing, and you can pretty much filter this as however you want. And I usually have it 2 bill market cap or higher and $10 plus. But you can filter this by different time frames so that you can get different trade ideas for different strategies and things that you might want to do, not just with options, but buying and holding or trading. It looks like DWAC is up. What the hell's going on? Something's going on in the markets, and that's what Mark is trying to figure out. Is it time to buy DWAC? Could be time. I don't know. This is a pretty heavy fall though, pretty strong fall. So I mean, everything here in Pro is real time. You get pre-market and aftermarket price. So you can see it's up 3% aftermarket here. Now I could even pull out a watch list, but you know what I'm just gonna do. All right, this is the watch list that I have. It's called watch list. You can name it anything you want. And I have an RSI at the bottom. So you can put all of the indicators that you want. You can put like an EMA. You can customize the EMA. There's absolutely nothing that you will be able to do in another platform that you cannot do inside the Benzinga Pro. All right. And if you might be using 100 indicators, you're doing it all wrong, my friend. So these prices that you're seeing, guys, this is my watch list that I have for this. The prices are after hours. So you're looking at, let me just arrange it from highest to low. 1 click, 2 clicks. All right, Tesla up 7% after hours. NEO up 6% after hours. It's time to see what's going on here. Affirm up 3%. So you can see every stock, and this is something that you cannot see in other brokerages. Now, having this pre-market, being able to scan pre-market and scan aftermarket, you're already ahead of the curve because, like I said, all these brokerages will not show you that. They only aggregate data on regular trading hours. So do you really want to start scanning? Damn, look at Tesla. Do you really want to start scanning when the market's been open for 5 hours? Look at this damn move. Wow. Someone told me to buy Tesla at 750, and I just wish, I bought more. Tesla on a rip, up 8%. All right, let's try to find the news. All right, let's calm down. Calm down, everybody. Let's find the news. Okay, here's the news. Tesla CEO Musk said, expects Tesla to launch FSD beta software in Europe later this year, depending on regulatory approval. sees challenge with battery production next year. Says batteries will be limiting factor in 2 to 3 years. There's a form 424B2 from Chase with Tesla. Okay. You can read all the SEC filings, guys, here. So every time you really want to find out what's going on with the stock, your best bet is to find it in Pro, because I've been trading for years and I can tell you it happens many times. Not anymore because I don't use these other brokerages, but many times a stock would move and there was nothing on the news and there was no reason, there's no idea why this was moving. So I logged into Pro at that time and I saw that Pro had all the news on it. It had articles and it had all that stuff. And just keep in mind, this is included in the trading school as well. So don't get overwhelmed. We have a lot of sessions. We have a lot of tutorial videos. We have a lot of help. We have a lot of help for this. And, you know, we are pretty much one of the few companies that do that, right? You look at, I'm not going to say the names, but, you know, there are like brokerages per se that make billions of dollars, or other companies that make billions of dollars, and they don't even have a phone number for you to call. They don't even have an email, and they respond to you years later. So you guys know this is true. Here, we pride ourselves with getting to know our users because we built these platforms for our users. And that's why we look at things from a different perspective. You know, we're literally giving you guys tools and we're trying to find ways to help you consistently. I'm telling you, there's so many meetings I have throughout the week just for this, just to how continue improving Benzinga Pro, how to give you guys more value, how to give you more value, right, as a user, regardless of what you're doing here, right? So Benzinga Pro is going to continue to improve. Is going to continue to have added features. We just got talking about that. We just added short interest. Look at this. Look at this right here. Short interest. All right. Deals cut. Now you have it. All right. Now you have all the short interest days to cover, volume, float, percentage of short floated. You have all now, and keep in mind, we're going to keep adding more tools, more resources, more data that can help you make informed trading and financial decisions. I mean, this move in Tesla is just insane. It's pretty wild. So you can look at not just short interest, but you can look at the regular data. You can look at the financials. If you're more of like an analytical guy, you know, I'm a finance guy, so I look at all this stuff, of course, if I'm investing, but if I'm not, then I really don't care. And, you know, you have the chart. That's the most important thing for me, the chart. And these are real-time charts. Okay. These are not delayed like 99% of all the other charts out there. And they don't even tell you. These are real-time charts. All right. Look at this move. Look at that move. Let's try to calculate. All right. Let's say you bought this thing here. So, I mean, Tesla's up 30% from $760. Yeah, I mean, I don't think this is going back down. Who knows? Who knows about, I mean, I don't know. Tesla's Tesla, you know? But this is the thing. With Pro, you can find great trade ideas, all these sorts of things. Let's look at this other stock, MIND. I think this is like the psychedelic drug one. I think so. Yeah, I think this is MindMed. I think this is MindMed. This was a penny stock, OTC. I remember it went public. I think they even appeared on Benzinga Small Cap or some Benzinga conference. Let's try to scroll back a bit, because I remember this pretty well. Yeah, this went up a lot. This went all the way to $3 and such. So could it be the reversal? I mean, our psychedelic. Yo, by the way, I forgot to say, we have some sort of like event about psychedelics, since we are talking about psychedelics now. I don't know how this just fit in so well, but yeah, there is an event about psychedelics with Benzinga, and that's crazy. We're looking at a psychedelic company. So yeah, if it's the time to start, the psychedelic movement, then I'm telling you, MIND is probably a good stock to give a try. It's also getting to that nice technical level there. So it looks like it already bounced. Now, this company has a competition that is already out there. I know the name of the company is like Compass or something like that. I don't know the ticker, but I know that there's a company out there that does this. I have not looked at their chart in a long time, but last time I saw it, it was like in its mid-20s. I don't know where it is now. So I have no idea which it is, but it's Compass something. But basically, this is a very revolutionary company, right? And on what they're doing. I think they're trying to battle depression and ADHD and something like that with psychedelics, which is an interesting approach. And if it works, it works. It's natural. I mean, better than all these other horrible side effects you get with all this other stuff, like, side effects, heart attack, diarrhea, stroke, it's enough. Let's give this a shot. Maybe this is it. Maybe this is really the thing, right? Natural medicine. Who knows? But I've been following this stock in my Benzinga Pro. I get all my news filtered for it. Okay, Les Ram says just having issues signing in. Okay, Les Ram, can you let me know if you already? I sent you a text there. Let me know if you already signed in and everything. I'm still gonna be here, guys, for maybe a little bit. If you guys have questions and things like that, but Les Ram, it should be working now. I mean, everything seems working. We had all these people sign up there, but so yeah, you can be following these sort of companies out there and all these other types of companies inside your Benzinga Pro. And this is something that you can do at any point by yourself. You can do it with other students. Keep in mind, you're doing your research, and there are a lot of other trading school students that are doing their research and they're posting it in the trading school, and they're all working together. So this is something, guys, that I really, really think you should spend some time in. It's included in the trading school. I have videos on how to help you with this. There's also other ways to get videos for this. Just let me know once you sign in and I'll help you out. But with all of that, okay, I think I went over a lot. I want to give everybody a thank you here for staying here, making sure that whoever stayed until the end and actually uses Benzinga Pro or uses the school or anything, shout out to you for taking the time to invest in your education. Nobody else will do that. Nobody else will do that but you, right? You have to start. Keep in mind, education is the beginning, right? If you skip it, you know how that ends. So for those that are starting to trade, do yourself a favor, do your wallet a favor, do your emotional health a favor, okay? And don't go out there and try to wing this. Take it seriously like what it is. This is a full-time career, but if you're starting to get your feet wet, the best way to do it is with an instructor and with an actual classroom setting, a community setting, and of course, you need the right tools. You need the right tools. And once you have all these combinations of great things, which we give you in the school, you're going to feel the difference. I'm telling you, I've seen amazing results on people that have only been doing this for a couple of months. And really, the main factor here is that they are at least going to okay, hear me out, at least 2 or 3 sessions a week. And they are recorded. The sessions are recorded. So if you miss them, you can always watch them later. So we have people that are not able to attend the live classes at all because they live on another part of the world. And you know what happens? They just watch the recordings. We have a Q&A session right after the lecture. So you get the full Q&A session. We have a lesson review as well for another extra hour. So you have 3 total hours with Mark Putrino. And you have a chat room literally called Questions for Mark, so that you can ask your questions to Mark. And what's the other thing here? Okay, so this is the recording, guys. I just want to show that really quick. If you click live on the top left corner, whenever the class is in session, that's when you're actually going to click there, all right? And it's going to take you to the live class. The homepage is where you can find all the scheduling, all that sort of stuff. The chat rooms, we went over the chat rooms. You guys are getting access to every single chat room and more as a courtesy, and Benzinga Pro guys. So I think we covered a lot. I think we covered the majority of things, but there's also, we could go for days here, for those that joined, if you want a more in-depth video on how to use Pro, email me. If you want a more in-depth video on how to use the trading school, email me. Anything that you need, email me. I'm going to help you out, and you can call me as well. So guys, with all that said, thanks a lot for being here. Shout out to the community of all the Zingers. Good to have you here, fellas. I'll see you guys next time. Make sure you sign up. Make sure you join 7-day money back guarantee. This is till midnight. If you have questions, contact us. I'll put that in the chat box. So, all right, folks, we'll see you guys next time. Have a great day. Bye.